Hello?
Hey, we'll start in a minute. Hey, Mark.
How you doing?
Hello. Hi, Yoda.
Hey, Robert.
Hello.
Just
Banksy in the house.
Banksy in the house. Let me just give permission to Kyle to take over.
Yeah, hey,
There.
I'm in here now.
Hey, Kyle. I sent you you're the host now, so you can add people.
Okay.
All right.
All right, so I'm going to ask you to unmute here, but I guess that's how I always end up having to. All right, do you see where I asked you to unmute, Yoda?
Yeah.
Okay, perfect.
All right. So we have some areas on the because the countries that will not see it live, right? So we'll need to share it later.
Right. And we'll try to, like we were messaging, we'll pause in between projects, and that way I could cut it up and make it smaller for YouTube anyway. So it'll be easy for people to digest.
Yep.
All right, and it's also the holiday, so I'm not expecting a huge turnout. Let's just kind of get started.
All right, good. All right. The most important thing is to have it recorded so people can see it in their own time and play it back. All right, so let's start by covering many stuff. End of the year, we want to kind of give a preview, and some going to be 30 feet above, some going to be deeper about what is it that we are working on during that year, and what is our expectation for the next year that's coming in. I will start, by the way, by saying that for the Smart project, the Smart.Exchange project, we decided, based on concern that we received from users, we decided to release the token earlier, even though we're not starting the trading. There was a big concern, which, by the way, right now become to be a reality. It's not just concern anymore. But it was concern that a lot of investors that invest in the token, the VCs that they use is no longer exist. They either rug pulling or went under, and are receiving a lot of individual people that really crying for help because they cannot find the VCs or nobody respond to them. And it's put us in a situation that we need to figure out how to help those people. But definitely we want to release all the tokens right away in the next few days for self-custody behind the damper shield, because as long as it's self-custody, it's safer for the token holder. Then actually we will send it to the VC, and the VC later on will send it in when the market will change. Could be this year, I mean 2023, it could be 2024, nobody knows. So we don't know if the VCs will still be there at that time. So I'm wrapping up everything, and I will send letter out regarding to this distribution for self-custody. I just want to be clear about something, that the self-custody behind the damper shield is completely 100% decentralized, which means if somebody losing his wallet and doesn't have access to his own wallet, that means he will not going to have access to the vault, his own vault behind the damper shield, and we cannot recover that. So you just need to be clear that if somebody loses wallet, he's losing all the tokens because we don't have access. So that's very important clarification. And another thing that we also changed is that since a lot of our project being created based on Qwantum Finance models, we decided that we want to change the foundation name. It started by we don't want to be associated with a name that there is some token in the market like Atom Foundation. If everybody remember, we didn't want to keep the Atom because somebody already have a token that called Atom, and we didn't want to create kind of a conflict or misunderstanding or misleading. And then when we pursue a different name, we realized that a lot of our tech, a lot of our technology, without even knowing, by the way, it's something that I discovered later on, being created in the models that basically they are quantum finance models. And then when I start to investigate that field, which is a very extremely brand new field, by the way, there is no many expert in the world right now that dealing with quantum finance. It's like a new field that coming together, but it looks like it's something that's going to shake around all the economy and the models or the previous models that been around for a very long time, because quantum finance has ability to not only create liquidity when there is no liquidity, it's also have the ability to remove the risk or reduce the risk to some levels that it can open the door and democratize that to non-accredited, non-sophisticated people. It's really changing the game how investment can take place in very high risk vehicles like cryptocurrencies, NFTs, and so forth. So we decided to call to our organization Qwantum Finance Labs in order to be associated with that coming new, I believe, big change that everybody will probably going to start talking about in a year or two. Everybody going to say quantum finance everywhere. So we really want to be associated with that kind of revolution. And what I will do today, I will go between some projects. Some of them I will touch a little bit. Some of them I will dive more. Kyle will, if there is any question, Kyle will read them back to me. We will not do a lot of questions per project. We'll do 1, 2, 3 just to see if everything kind of clear. A lot of details exist in the white paper, and there is also a lot of videos per each project separately, like really dive in. So right now we really want to give a highlight about stuff. In some projects I will go more deeper to explain that because they've never been present before. So the first thing I will start with Smart.Exchange. I will share my screen so you can see it. Is the share. Okay, let me know when you can see it.
Yes, we could see it.
All right, cool. So the Smart.Exchange basically it's a massive project, and a lot of people probably know that we thought about the Smart.Exchange a long time ago, even before DeFi was exist. And the way that I see the future, and it's very important, by the way, to build something that you believe that's how the future is going to look like. Because if you're wrong, it will not going to happen. So you can pivot, but if you're right, you are the first to take the market. And a lot of projects pivoting again because they guess wrong. But those that be there first before everybody else, those are the ones that basically lead the way. And the way that we see the future when it's come to Smart.Exchange is which is basically layer 0 solution. We see that in the future there will be a lot of blockchain. And it doesn't matter right now if they're all going to be VM or not going to be VM. Eventually there will be so many, and they will need to talk together. It's like somebody have T-Mobile and AT&T phone. They need to talk together, and it doesn't make sense that everything will be separate from each other. Information will be separate. The data need to move between those chains, exactly like T-Mobile and AT&T can talk with each other. And usually, in order to do that, people need a cross. And the problem with cross-chain is that the cross-chain himself is centralized because it's using an oracle, and then the oracle have validators that validate. And a lot of projects using their own validators or using proof of stake validators. And the problem is that in the last year, massively in the last year, actually, we saw billions, not millions, billions of dollars being hacked into all those cross-chain. And if you're thinking into the future, you do understand that the big money or the big cross-chain that will take place, it's not with cryptocurrency. It will be with decentralized stocks. It will be with government money, like basically, for example, CBDCs. So it doesn't make sense that government money will go and use or utilize any kind of a cross-chain that is centralized or controlled by a group of people that they have incentive to hack or not to protect trillions of dollars. So all those cross-chains that exist right now, not only that they're vulnerable, they're not completely decentralized. And because of that, they cannot really serve the future. And not only that, when you're thinking about all the DeFi that exists today, everything is based on slippage, right? So everybody that's building DeFi is building slippage. And you do understand that it doesn't make sense that you will survive either, because nobody going to change dollar to euro in digital way and lose for slippage. Nobody going to change Apple to Tesla stock, digital stock, and lose for slippage. And there is no enough money in the world to park into DeFi pools in order to reduce slippage. I mean, all the concept of slippage is not going to survive. It makes sense to start with something, but it doesn't make sense that you will survive into the future. And what we created from day one, by the way, is basically a peer-to-peer, completely peer-to-peer, decentralized protocols that allow people to basically swap between each other and decentralized Oracle. And we utilize them in many forms. We have basically a few ways to do it. One is SmartExstension. So what we believe is that even though we have the smart swap itself that will allow people to come and actually swap from A to B in a UI model, we believe it will be more beneficiary if somebody doesn't need to come to anywhere. So imagine yourself that you go to Uniswap. I will show you example how it looks like. So imagine yourself that you go to Uniswap. I will change screen. So imagine yourself that you go to Uniswap, you're connecting your wallet, and then when you want to swap anything to anything, right? Let me put Ethereum. All right, so let's say you want to swap, it's working. I can connect Ethereum and on Ethereum. That's my testing. Yeah. Here we go. So let's say you want to connect to Uniswap and swap Ethereum to other token, right? So the main idea is that you will have a pop-up that basically showing you that you can swap Ethereum to DAI with better rate, or you can even send BNB or Polygon or Cardano or any other tokens that you have in your wallet in exchange for that Ethereum without having Ethereum or without having anything on the Ethereum blockchain. So it's basically like kidnapping. Every time you're about to basically do a transaction or on any protocol, it doesn't matter if it's Uniswap, PancakeSwap, SushiSwap, doesn't matter which one. This basically extension will pop up. It's not yet live. It will be live soon, and it will basically showing you that not only that you can get better rates, less slippage, but you also can save the gas fees by doing it. And by having that extension, it's kind of like if people are familiar with Rakuten is kind of an extension that every time you want to buy, let's say, computer, it's popping up a pop-up for you and say, hey, I find exactly the same computer in different place, which you can save 3% or 5%. And then if you're really about to buy anyway, why not to save those percentage? And Rakuten is a multi-billion-dollar San Francisco Bay Area company that really took the market by storm by operating like that. So we believe that providing an extension with DeFi can do the same effect that people will have every time they pop up and show them better deals, right? And beside that, we have the SmartPayment that we're working on, which means if you go to any type of kind of protocol and you need to deposit money, but you don't have that money, it will allow you to send any different money, and behind the scene, it will switch it to the right money. So for example, if I need to push BNB and I don't have BNB in my wallet, I can pay with it. So the protocol will get it, you will get BNB, but I will send it, and it will convert the it to BNB without me even break a sweat to do anything about it. And we also build in a technology for wallet that because we believe wallet will play big role in the future. We believe that eventually some wallet will be like one-stop shop, so they will need to have a lot of technology that will allow them to let people to use the wallet without go outside and swapping A to B or anything else. And the last thing that we basically bring into the market very soon, we're right now testing it, is a SmartBridge. So the bridge token basically allow people to take any type of token and moving it to any type of EVM blockchain. So you can go and choose any token that you like, and you can switch it to any EVM that you want. And if there is no EVM exists, a user by click of a button can create bridge into EVM. And the coolest thing is that once a bridge being created, the ownership of that bridge can be taken by whoever create that token, right? So whoever deployed that token, let's say Uniswap company, do not exist on, let's say, Polygon, right? Or do not exist on Binance Smart Chain. And just give an example. So you can basically bridge it over, and then Uniswap themselves, later on, if they want to take over the bridge, they can go and take over the bridge and become to be the owner of that bridge, and they become to be a master validator. And what that means, master validator, that means that there will be decentralized validator, but no transaction will take place without their permission. So it's not like we have validator that we're choosing. Basically, every project becomes to be its own master validator for its own bridges, and it also providing validation for all other projects in the ecosystem, right, in the world. And who choosing which validator will be on any transaction is automatically by the smart contract. But my point is that if anybody will hack into the validation system, it will hack only to one project. It will not hack to all the system. So everything is kind of decentralized in a way that we cannot hack, we cannot change it. It's combination between all the project and us. And then every project is different and changing in that way to protect the system. And what's very interesting about this decentralized bridge token, which we'll provide for free, by the way, will not charge anything, not the user to move between chain and not the validator to take over the bridge, is that we want to line a foundation that will allow later on to do bigger stuff. So for example, the way that I'm visioning the future is that when Soul Bond will kick in and people will have, let's say from DMV, they will have NFT Soul Bond in the wallet that say that this is who they are. Or let's say somebody doing some accreditation check and it been proved that he's a credited investor, and that company send Soul Bond to his wallet. So the point is that if this company working on Ethereum or working on Binance Smart Chain or maybe on 5 different EVM, it doesn't mean that they're working on all blockchain around the world, right? And some of them charging money and may easily extend themselves to more blockchain because they have an interest to collect fees, right? But others may do it for free. I don't know. Maybe you'll go to what's the more for the license drivers? I forgot the word of the agency for DVM, right? DVM, here we go. So if you go to DVM to have a kind of decentralized, the digital ID that's showing that who you say you are, maybe they're working with only one chain or two chain, but they're not in interest to start to provide information for all the chain in the world. So you will need to clone that information to different chain, right? If you're working in new chain that just created yesterday, and you need to show your credit score, you need to show your ID, you need to show your diploma, you need to show many stuff. You need to clone them from previous chain, and you need decentralized way to do that, because otherwise there is a big incentive for people to do in the United States, it's a big issue called identity theft, which means people stealing other people's identity, and then they go and take loans, right? So you don't want decentralized bridge, not decentralized bridge that allows someone to clone who you are and go to different chain and take loan in your behalf and then disappear, right? So the way that I envision it is that there will be a big identity theft in the future, and people will need to have a very secure cross-chain to move not just money, but also information. And information is very sensitive, so it has to be decentralized, and this is what we're working on. So when it comes to the Smart Exchange right now, we're going to we have the cross chain that's working right now with few chain, but we will add more chain and make it more flexible during this 2023. And we have the bridge that will be open in a few days. So people will start to utilize that too, and then we'll start to work on more and more, including the extension that will be ready. So that's when it comes to the Smart Exchange. Kyle, let me know if there is any question about the Smart Exchange.
Yeah, there hasn't been yet.
Okay, cool. So next, when it comes to Digen, as you know, Digen is designed to be it's designed to be shut down for a second. All right, let me switch to Digen. All right, so Digen designed to be a protocol like an umbrella, right? Like aggregator for aggregators, right? And it's designed to allow people to go to one place and see in that place access to all the aggregators that is out there, or all the DEXs out there. And the first version of Digen that we created, by the way, my screen froze. Do you see my screen, Kyle?
Yes, just it says Digen 18.144. Yeah, see your mouse moving.
But my brother thought, okay, I will see how I can fix it. So when it comes to Digen, when we built the first version, it wasn't flexible enough, which means we couldn't add DEXs, we couldn't add blockchain in easy way. We had to do our hard coding. And now the version 2 that coming, actually yesterday during the last few hours, during the night, we finished the smart contract for that. So the version 2 for Digen will be more flexible. It will not be hard coding. We will be able to add easily DEXs, easily blockchain. Even if blockchain being created a moment ago, we can, as long as that is EVM, we can add them to basically to the ecosystem and utilize it. And another thing that we add to the version 2 is that if you basically send the money, instead of the Digen checking for you where is the best out there transaction to work with, which DEX or exchange to work with, what will happen, it may split automatically from the smart contract. It may split your money between many DEXs, and you will not need to do many transactions. So you will do it in your behalf. You will not basically need to break a sweat on that. Let me try to do a share screen again, because there was an issue. It's the problem. All right. So any questions for Digen, Kyle? Can I move on?
Yeah, no questions.
All right, let's move on. And then next is the Dumper Shield. So as you know, we're working on the Dumper Shield right now. The Dumper Shield is up and running. But what else need to be added to the Dumper Shield is the most important component, which is the gateway. And what that means is that the gateway is basically, I will share my screen again. Here we go. So the damper shield is a technology that we created in order to allow, not just for ourselves, it's open for everybody. Every basically project come and add themselves to the damper shield. Right now it's Binance Smart Chain, but we're about to add all the EVM, so it will be open for all the EVM blockchains. And the idea is that there is something broken with the ecosystem today when it comes to vesting. Every project do not want to give to early investor token immediately. You want to do some vesting. And the problem with vesting is that it's creating a game theory and race to the bottom. Like if you're familiar with the game theory, the prison dilemma, should I cooperate or should I stay silent? It's exactly the game theory that happened with vesting in the world, because people say, if I'm under vesting, regular vesting for 6 months or 90 days or 12 months, and everybody is with me to the same period of time, should I hold after we all going out of the vesting, or should I dump before everybody else because I believe they will dump before me? And that prison dilemma causing for people to do race to the bottom because they believe that everybody will dump, so they want to be the dumper first before everybody else. And what's happening, every vesting that just opened is end up with very big dumping. For example, now Luna, I think 6 months ago, gave away a lot of version 2 to everybody, but with contingency that it's locked for 2 years, right? Some of that locked for 2 years, or the majority of that locked for 2 years. What that means, after 2 years, when the 2 years is over, what do you think will happen? What will happen is that everybody that have the same concern, like I say, that somebody else will dump, they will want to dump before them, and there will be immediately big tank. And the damper shield design, again, using Qwantum Finance model to remove that dilemma and allow multiply position, multiply choices, and not just 2, right? So the idea of the damper shield is when a token being added to the damper shield, basically the user is vesting, but is not vesting. So theoretically, he can vote and remove himself from the vesting if he want immediately, no problem at all. But most likely, user will not do that. And the reason that they will not vote to remove themselves from the vesting is because it immediately will cause run on the bank and everybody will dump. So instead of voting to remove yourself from the vesting, we allow people to basically sell during the vesting, engaging with liquidity either by OTC or using the gateway. You cannot yet see the gateway here, so I will show you here the design of the gateway, so you can see how it's going to look like. So the gateway is basically a brilliant idea that say to the user behind the damper shield, if you want to sell a token, you can decide how much discount you want to give versus the market. So let's say you have a token that was $1 and you want to sell it to the market indirectly, and you want to give 10% discount. So obviously it makes sense that if somebody bought the token for 1 cent and I will let them go to the market directly, you have incentive to sell the token at any amount as long as it's higher than 1 cent, which means it doesn't care to sell for 99% discount because it's still not going to lose, right? But during the gateway, it's providing a discount to third party, anyone that wants to come and provide that liquidity. And you say, take my token, I will give you 10% discount. And what's happened, user can come to the gateway, even using algorithm, they don't need to come physically. They can create bots for that. And the depositing native token or stablecoin with the 10% discount, take the tokens that they want to buy, and they go to the secondary market. They're going to Centralized Exchange, they go to Decentralized Exchange, and they sell it over there. And whatever they cannot sell, they return. So what it's telling us is that those players that put money, take the token and sell it, can return it or return the leftover, which means they don't have a risk to be a provider. So they're kind of taking 10% discount without risk, right? Now, the gateway is very smart. It's not going to allow people to buy unlimited token, go to the secondary market and dump it over there. What the gateway is doing is measuring the real market, and it's checking how much appreciation happened in the secondary market today versus yesterday. So for example, if the token increased from yesterday $1 to $10, right? So the gateway will allow people to buy token and sell token to the gateway, as long that the amount of the dumping will not cross 50% of yesterday appreciation, which means if everybody will dump whatever they bought, even at cost price, they can only hurt the market price from $10 to $5, but they cannot go below $5. So instead of waiting 2 years or 12 months or 6 months and do rush to the bottom, race to the bottom, what we're doing here with this logic, we engaging with liquidity daily, but the token is keep going up daily because there is no really ability to go 50% below yesterday appreciation. So every day is going up. So that's hopefully may cause to scenario that after the vesting is over, maybe people will vote to extend it because they don't want to release themselves to the market and do rest of the bottom. Maybe people will be more bullish because there was no really dumping during that time. So the graph that we see the token go up and immediately go down may change by going up and then slightly keep going up. Hopefully, that's the goal, right? So it's totally makes sense on theory, but it's requiring to test it out. But it's by far more makes sense than the current situation with the vesting in the market. So that's the Dumper Shield. There is other feature to the Dumper Shield, which we will basically keep adding, but I don't want to cover them right now. But this is the main one, the gateway.
So we still have some projects that needed KYC, AML, and accreditation. I know one piece of tech that people have been waiting on is the accreditation feature. So is there any update on accreditation?
Yeah, so basically we contact with company which we are friend with, InvestReady, and they're doing accreditation check utilizing the concept of sell bond, but they're working only on specific blockchain. They're not working on for example on Binance Smart Chain. And once we will have the bridge that I mentioned, I will be able to do accreditation check on Ethereum, but clone that accreditation to the Binance Smart Chain, and basically we will be able to recognize that user on Binance Smart Chain, they are accredited investor, even though InvestReady do not work with Binance Smart Chain yet. So my point is that the bridges that I mentioned earlier will not wait for provider to step into a new blockchain. We can clone whatever the provider make in very decentralized way, so we can trust that clone like a zero knowledge. We can trust that clone as a zero knowledge and basically approve people to engage with token because we know the accredited investor on the Ethereum chain, right? So once the bridge will be ready, which is very soon, we will do that.
Okay, sounds good.
All right.
I don't see any other questions in here.
All right, cool. So the next is the PDO. PDO, which I'm very excited to see how it will play into the market when the market will start change. As you know, all of you, everybody helping project to, let me share my screen. Everybody building project or infrastructure to help project to go to the market, like initial offering or launchpad, all those, right? But the moment that project in the market, nobody there for them, right? And it's very sad because it doesn't make sense that so many projects will launch and when the market hit, so many will survive the bear market, right? It doesn't make sense. It's not healthy. It doesn't supposed to be like that, and it shouldn't be like that. And we are the first in the world actually to create a scale pad. Everybody will know what is a launch pad, but we created the scale pad, which is basically designed to serve existing project in the market. And what's cool about the scale pad is, which is also have a component of Qwantum Finance model, which is allowed to basically project to keep raising money even though they already launched, and it allowed the user to invest in project without investing. Like simultaneously, you can basically invest and not invest, and first see the future and then make decision. It's a little bit confusing, but it's basically brilliant how people can secure in investment and not actually be investors at all during that time, and only afterward decided whether or not they want to be basically an investor. So that's the secure feature concept. And the way that I see the PDO, I think once the market will shift, and again, I don't have crystal ball to say when, but if it will be during 2023 or 2024, we most likely going to see again, like any bull market, we're going to see a very massive attention and desire for new project, right? A lot of money will want to flow into new project. And what will happen when everybody will do the bull run and go after any project that's launching without even checking who they are, there will be a lot of existing projects that will want to welcome investors. And what will happen, those investors will not have ability to help the project. They can only go and buy the token from secondary market, but none of that money will reach to the team. None of that money will increase liquidity. None of that money will basically increase the value of the token. And what I mean by that, just to show you example of what that means, so you can understand my point. If you are going to PancakeSwap, and I will show you here an example that I'm using, so I know for sure that is let's see. Let's take back. Right. So let's say somebody want to buy back token, right? Which is kind of a token that people know. Now you need to understand that when it comes to tokens, right now most of the tokens in the industry, they're not utility, which means you don't buy them in order to use them. You buy them to hold them because you believe that they will be appreciated, right? They will appreciate it. So they're kind of investment instruments, right? And what's the problem is that when somebody comes to secondary market like PancakeSwap to buy this token, so if I will push $10,000, let's say I want to buy this token, right? And what will happen is that first, when I will buy this token, do you see here something called price impact, 45%. So what that's telling you? That's telling you that the moment that I will push $10,000, my money will go to standby room in the blockchain, and validator will need to choose which transaction to take first based on who pay more gas, right? So I will be standby, like you know, waiting for the validator to pick me up. And the moment I will push my money, and bot will realize that there is 45% price impact, bot will push $10,000 as well with higher gas in order to hijack the transaction, front running me, buy the token before me. So when I will buy the token, they will immediately will sell like a sandwich. And what will happen, I will buy $10,000 or I will spend $10,000 in order to buy back, but most of this money is not going to reach to the community. It will go to bot. Bot stealing money on daily basis from DeFi all day long. I mean, community that hoping the price to go up, getting crumbs. Most of the money go to bots, right? 45%, there is no chance in the world that anything above 2-3% price impact will even going to be seen. Everything going to be stole by bot. Now, with the PDO, it's not going to happen, because when somebody buying from the back token directly from the PDO, the entire money will go into the pool without get exposure to front-running attack. So there is front-running attack protection, right? So the entire money will boost the token significantly. Another thing is that I will show you here, when you're buying one token, you see here the value of one token is 12 cents, right? So if I will go and buy 10,000 tokens, sorry, $10,000 tokens, pay attention that I'm paying not 12 cents. I almost paid twice because of the slippage. So as a buyer, I'm paying more, the community see nothing, and the bot are the winner. That's the situation of DeFi today. And PDO is changing the game because it allows users to buy directly from the company, and the same price that is right now in the market 12 cents, I can buy my entire $10,000 for 12 cents. So I have zero slippage, and my entire money will go and create liquidity and increase the value of the token, and even will give to the project the LP token as sustainable liquidity owner, right? So the project will own the LP eventually. So the way that I see the future is when the market will shift and people will start to go after investing in IDOs and stuff like that, all the existing project that is out there will see massive money coming in as well. And PDO will give people more tokens for the same value. It will increase the value of the token significantly, then go directly to DEXs, and it will provide liquidity to the project. So in other words, it's like a hijacking. Instead of you, again, go to DEX like Uniswap, Pancake, SushiSwap, you can buy exactly the same token from PDO, but you get more, the community gets more, and the project gets more. And the project can even split some of the proceeds that is receiving and say, I don't want to send everything to the liquidity pool. I want to split it. Let's say I want to split it, 45% go to the project, 10% go to the dumper shield to buy previous holders. So it can split the proceed. And by doing it like that, it kind of doing another fundraising, right? So it's the only technology in the world right now that basically serving existing project. And once the market will change, it will be amazing to see how project going to utilize it. I believe it's going to boom like we never saw before, right? And unlike Launchpad, that is 1 day, 1 week, 1 month and over, PDO is all years, all day long. So it's not limited. You can run PDO and as many as you like, not just one, with different terms, different APY, different offering, and you can run them as much as and as long that you like as a project. And it's by far better than any staking that's existing right now in the market. Staking right now doing nothing. It's not improving liquidity. It's not increasing the rent. Actually, staking is the worst thing ever, because what you do, you say to people, do not sell your token today. Wait 3 months, 6 months, 9 months. I will give you more free token, so you can become to be a better dumper, right? So all the staking concept in the world today is not really efficient like the post-DEX offering, the scalp pad. Kyle, can I move on or?
Yeah, we don't have any questions in the chat, but I have one that I think it's important to kind of put out there is explain how PDO, for our projects at least, works with the Dumper Shield gateway.
Yeah, so when we basically built tokenomic, we said that we will have pre-sale, public sale, and then the rest of the token will be sold through the PDO. And then we said 50% of the money that we're receiving will go to the liquidity pool, which means buy token and create liquidity and increase the liquidity and increase the token. And the other 50% will basically go to the dumper shield. So what that means, the dumper shield? That means that if we have user behind the dumper shield that holding tokens, you remember I mentioned the gateway. So what that means is people on the gateway that want to sell the tokens not only can sell the token to any liquidity provider that's willing to buy the token for discount, the PDO also going automatically to go to the gateway, and it's already working, and it will buy from the gateway the token, which means if somebody is an early investor and is behind the dumper shield with token and they want to engage with liquidity, not only that it can engage with liquidity indirectly with centralized and decentralized exchange, but for every dollar that's coming into the PDO, 50 cents will go to the dumper shield, to the gateway, to buy token. And by the way, PDO do not buy token for discount. It buy the token with whatever the face value of the token in the market. So if somebody offering 10% discount, that's for liquidity provider. PDO do not engaging with discount, is buying directly whatever the price in the market is buying it at the same price market. So it's basically providing liquidity to early investor. And that's very fascinating because if somebody following the industry, you probably saw that a lot of people doing pre-sale, let's say $1 million, $500,000, whatever number is, even 10 million. But then when they're doing a liquidity provider, when they do liquidity mining, when they do staking, the staking is by far larger. Sometimes it's hundreds of millions, sometimes even billion, or whatever it is, it's always higher than the pre-sale, right? And pre-sale investors never get anything from staking. Somebody come and stake, and there is billions of zillion money in the staking. None of that belongs to the project. None of that belong to the liquidity. None of that belong to pre-sale investor. It's like you see water in the river. Look at that, and that's it. It's looks nice, but nothing more. What we're offering is turn that river and utilize the power of the river to create electricity. So we say people going to daily buy and sell the token. Doesn't matter if it's a bear market, if it's a bull market. People buy token every day. Even now that we're talking, people go and buy. Over during a bear market, the more sell than buy, and during a bull market, the more buy than sell. But every day you have buy pressure and sell pressure every day. So why the heck to go directly to PancakeSwap and Uniswap and buy token if you can buy directly from the company, no slippage? Most of the money will affect the price of the token and not been stolen by bot. And there will be more liquidity that satisfies the entire investors, the entire community. And some of the money that you inject can even buy out early investors, so they will not going to put sell pressure on the market when the vesting is over. So that's how we build the ecosystem that new investors that basically buying token, their money being used in order to benefit the entire ecosystem, including early investor that behind the dumper ship. Yeah.
Okay. No other questions. Yeah.
All right. Cool. So next, another project that we are basically working on and is basically Freez. Freez is basically a technology that we built and then we did simulation and we realized that it's not efficient enough. It's not really beating any scenario. So we plan to upgrade the Freez in a way that it will survive any scenario. But the main idea of the Freez is alternative for stablecoin and lending. So what that means is that if you have a token, let's say you have each token, and you want to basically during a bear market, you want to avoid crash, right? When the market go down. What do we do today? What everybody is doing today? And the answer is that everybody either sell the token to stablecoin, like parking the money on stablecoin, which means they also have a problem with taxes because it's considered tax event, or they're spending some money on hedging by doing option, right, long and short, in order to protect the investment. And that's what everybody is doing today. And Freez is very unique technology that allow you to take the token with whatever the face value is. And by click of a button, you can basically freeze, unfreeze that. In other words, I can take an ETH or BNB or any other token out there, and whatever the face value in the market right now, once I freeze it, I can come today, tomorrow, next year, next month, doesn't matter. If I will unfreeze it, I will get the same face value. I may get less token, I may get more token, but definitely from dollar point of view, it will be exactly same face value. And it's a one-click freeze, unfreeze, right? So when somebody is basically, for example, want to freeze ETH or BNB or unfreeze that, so one click you can click on freeze and unfreeze that, and that's it. And the way that it's designed, it's basically there is no LTV like loan, 85, 80%, 75% LTV. It's 100%. There is no risk of liquidation like you have with protocols that lending you money and there is liquidation risk. There is no tax trigger because it's considered from tax point of view like 100% loan, right? And it's completely decentralized, which means there is no exposure if there is liquidity or no liquidity. And every given time, there is 100% exactly amount that needed in order to pay you back the face value of whatever you're eligible for. So that's how Freez been created. We built it and then after we done simulation, we realized that it's not powerful enough because it's not beating every scenario that we can think of. And we say, okay, let's rebuild something that will make it by far better. So we're in the middle of rebuilding it, and once it will be ready, it will be also interesting to see what adoption that can bring. The next thing that I want to talk about is a very amazing project that I think is kind of blowing mind, and what's interesting about this project is that it's called DEREX. It's a RegFi DeFi project, and I want to explain that to everyone. And I want to explain before that why it's so important. As you know, when we're building basically the ecosystem, right? Let me share a different screen. All right. So we're rebuilding the ecosystem, the Qwantum Finance ecosystem. You know that we have a lot of projects that we're building with the same core models, which is basically the Qwantum Finance models that designed to reduce the risk and increase the liquidity for different industries. And one of the things that we thought about is that we say it doesn't make sense that, I don't know, the startup industry have 95% failure rate, and we're building a lot of projects and each one of them will be successful, right? It doesn't make sense. I mean, for sure, some of our projects will not going to make it. Some of them will be average. Maybe some of them will be completely home run, and nobody know which one will be the one, right? It's nobody have the crystal ball to say that. And since even when somebody so sure about project that this is the one that can make it, it may wrong, or maybe right. Maybe it done 100x or 1000x, but there is no liquidity to cash out with 1000x, right? So because sometimes token can increase, but there is no enough liquidity to cash out, right? And sometimes the token is not make it, and the project is fail, and theoretically in the existing world, you need to say bye-bye to your investment, right? And here we thought about how can we protect the people that put their money to doesn't matter which project. How can we protect them more? How can we allow them one step further to more exit strategy and more flexibility and diversification? And the answer for that was, if you buying into, doesn't matter which project you believe is the right one, if you buying into a project, you will be a token holder as a first position. And if you, let's say you invest in Smart and it's done 10x, 100x, 1000x, and you have $100 million, there is no guarantee that there is enough liquidity, right, for you to exit $100 million. Or let's say you invest in some project that fail because nobody liked it, nobody interested in that. So your investment basically is supposed to go to the ground, finito, right? It's worthless. But what we say here with our ecosystem, we say no. We say you can utilize technology that we're building that called router that allow you to take your face value, not the amount of token, the face value of the token. So whatever they are, whatever they're worth in the market. And let's say you have $100 million face value of token, $1,000 face value of token, whatever they're worth, you can teleport them to any other project that you like, with the same face value. So it will burn the token in project A and will mint token for you with same face value in project B. The only difference is that you will be behind the damper shield as a second position. Second position meaning that the people that actually pay for the token will be first position, and those that relocate to that project or get token for free, they will be second position. And it makes sense because if you give airdrop to people, which means token for free, you do understand that it's not fair that those that receive token for free will have first position like somebody that actually paid for the token, right? They need to come as a second position, which means the first position need to engage with liquidity first. And once it's been satisfied, second position can engage with liquidity second, right? So that's the idea that people can move between the project. And the project that I'm about to show right now, the DEREX project, it's so fascinating, it's so brilliant, it's so powerful that I think it can change completely the market. And one of the things I want to do, I don't want to raise money for that project. I'm trying to think in the last few days how can we give that project to the public, to the people? I want the people to own it. I want communities and influencers and their followers to own that project. It's not easy because I don't want to go and do a simple airdrop. It's not so easy. I need to think about really new way or good way how people will basically receive it, because even when you do airdrop, people faking, they're creating a lot of wallet, they're suddenly collecting a lot of tokens and become to be dumper at the end. So we need to think how to do that. And I want to show you why it's so important. If this project, the DEREX project, will become to be so successful like I think it will be, it may provide a lot of liquidity, a lot of daily trading. It may even be picked up by a lot of exchanges. And it can be basically an exit strategy for token holder on any project that we have. So if somebody invests into Freez and it doesn't have exit strategy, it can teleport his token to DEREX and exit from DEREX, right? So let's talk about DEREX. What is DEREX is all about? Some of you probably saw Kevin O'Leary is our basically endorsement person for this project. We're still thinking, because what's happened with FTX, whether or not we'll keep him or not in the front, we're still thinking about it. So ignore that part for in the meantime. So let's talk about what is DEREX. DEREX is the first of its kind RegFi, DeFi technology that taking the entire DeFi to a new level. And I want to be clear what that means. Until today, when we used to have Uniswap, PancakeSwap, all those DeFi, they're not really sophisticated. They're very vanilla, and it makes sense. The industry is very, new, so it makes sense that when stuff started, they will not be at the best that they can be. So the kind of step number one. And if you're engaging with DeFi like Uniswap today, it's kind of like engaging with the stock market 1929, right? Everything is wild west. People can buy, stuff can go all the way to the roof. They can drop all the way to the floor. Maybe they after people jumping from building because they lost the entire money in saving. So right now there is an issue that people engaging with financial instruments, and there is no regulation, there is no rules, there is no protection from scam. There is no, it's like you go to sleep, you wake up into a good day or nightmare. You don't know what you wake up into. And that being said, people don't like regulation being forced by some group of people that think that they're better than you and they know how you should manage your money. So in one side, we don't want centralized regulation that will tell us what to do. On the other side, we don't want jungle that basically rip off all our money and we can wake up into nothing, right? So the DEREX is the first of its kind technology that I believe can put the entire DeFi in high level and turn it to be so sophisticated technology that will be able to support the next level of DeFi. And the way that it works, it's also been built on Bond. I will explain in a second why and how, but it's not regular ERC20. It's a hybrid of NFT and token combined. It's a ERC 3475. It's a new technology, and I want to explain what is going on over here. So basically, the way that DEREX is being created is that everybody that's injecting money to the pool, as you know, when people creating a liquidity pool, the public come and provide liquidity. So what is telling us? It's telling us that we have two types of users that we need to concern. One is the trader that switch A to B, B to A, whatever you feel and think that is the best, right? So, and the second one is basically the liquidity provider, that guy that actually put both tokens from the beginning in the pool in order to allow that trader to take place. So in other words, we have two users that all they want to do is make a buck. They're not here to lose, right? So there is no right or wrong. They're both users that need to be protected. And right now there is a problem because the current industry, there is a conflict of interest between the trader to the liquidity provider. Again, theory again. So the game theory again is the traders say, okay, if the market is going down, should I dump on the pool and take my money out before the LP will take his liquidity out? And the LP thinking the same. He's thinking everybody about to dump, I should remove my liquidity. Now, let's understand what that means. When liquidity provider decide to walk away from a pool and is cashing out his liquidity tokens, right, the LP token, you're receiving two type of outcome: money, let's say whatever BNB or native token or stablecoin, and the token from the project. So obviously, when you're receiving both, you skip the money, and the token is trashing back to the pool in order to get more money, right? So when liquidity provider walk away from the pool, not only does it become to be the first dumper to dump token back to the pool, but you reduce the liquidity from the pool. So the slippage in the pool become to be worse for the next trader. So it's kind of dumping on steroid, right? And every time somebody dumping, because of this multi-effect of pool going shorter and shorter, the slippage go higher and higher, and then price dumping significantly, right? Like overnight. And that's problem number one, that there is a conflict of interest. And problem number two, which is a very big no-no, but nobody pay attention for that right now, is that, and everybody doing it, by the way, is that when projects launching and is inviting the public to put liquidity in the pool, what the project is doing is give a free token. You give free token to developer, give free token to advisor, give free token for marketing, for PR, and instead of paying cash money, you pay with token or combination. So it's basically using the token as a way of money to pay those people, even airdrop, right? And what that mean? That means that all those people that receive discount token or free token as alternative to money, when they will come to the pool to cash out, they will basically steal away money that belonged to the user that Parker over there and accept to return later on to replace it, to swap it if needed, right? So what's the difference between what all the projects in the world doing to FTX? It's exactly the same thing. FTX took people money and start to spread it like it was his own account, right? And people do it in the same way. The taking token, give away token to people and say, go cash out. There is money over there, belong to user. Go cash out. I don't have money to pay you for marketing. Go take it from the users, right? It's the same big no-no. And a lot of time you see a project start with face value, 10 cents, $1, whatever the face value is, and it's booming to whatever is booming, right? But do you understand that if everybody will return the token that they bought, the price needs to go exactly to the same price it starts with, right? Same ratio. And what really happens is that a lot of time price go under the face value that it starts with. Why is that? It's because all those discount token, free token, giveaway token that distributed by the project for free in exchange for money, they're the one that come and cash out, and they're the one that tank the price below the face value that it starts with. So people don't pay attention for that, and they only talk about FTX, but basically every project in the world do exactly the same, right? And DEREX designed to protect everybody from that as well. And I want to explain how it works. So the first thing that we have in DEREX is basically a feature that's called circuit breakers. And what that means is that if people put money in the pool, can we agree that they are the bank? If it's their money, nobody should tell them how to lose their money. It's their money. It's their money. They should design their own criteria, how and when or if they want to lose their own money. Obviously, they can walk away if they want to, but we don't want them to walk away. So we need to give them tools to monitor the regulation of their own money, how they're willing to lose it, right? And what we have, I will show it here in the design because it's easy to show it here. Because the DEREX is not yet live, so I don't want to go between all the pages just to find it. Show it here what people can do. So when somebody adding money to the liquidity pool, it can vote with other liquidity providers on regulation. So for example, it can vote whether or not the pool will be public or private. It can vote whatever the slippage in the pool will be. So for example, let's say all of us are liquidity providing in some pool. we can vote that we don't want our pool, because it's our money, to lose more than 5% slippage a day, or 2% slippage per hour, or 1% slippage per transaction. Or maybe we don't want to be so hard with number, and we say whatever the movement, average price, whatever the MA is, we want 1%, not below that. Whatever it is, don't go 1% below whatever it is. So we can vote whatever regulation we like. We can even, by the way, vote that if suddenly there is a FTX or Luna crash again, we can vote that in the next 24 hours, because everybody under panic and do run on the bank on everything, we can vote that in the next 24 hours or 6 hours or 48 hours, there is no whatsoever slippage. Nobody can redeem from the pool and sell to the pool and cash out. But whatever we're going to vote as LP that will limit the trader also will limit ourselves. So if we vote that there is no more than 10% slippage a day, we as liquidity provider cannot cash out more than 10% liquidity for day. If we vote that there is no more than 1% for whatever the average price, we cannot redeem more than 1% liquidity per day. If we vote that there is 0 slippage for the day, the pool is locked, we cannot redeem even 1 cent from the pool during that lock. So in other words, it's putting the LP and the trader on the same boat instead of being conflict of interest. So it's putting them together on the same pot. Trader will not be panicked seeing that there is no ability to trade if they know that the LP cannot move money either, right? It's like the bank shutting down ATM during 9/11 or whatever, right? So no panic. And there is a lot of feature that people can vote on it and basically creating their own regulation. And you need to understand, today, there is no regulation. When LP is feeling the risk, it's just to move away his money. It's cashing out, throwing the LP, take the money out, become to be a dumper, shrinking the pool, move to the next one. And actually, if we're thinking about it, there is a lot of protocol out there today that people give them the money, like yield aggregators and all those protocols, and they're moving the money between LP pools, and they don't even think about anything. They just move the money wherever is make more and wherever the risk is less. So they don't even say I'm moving, they're already gone, right? So money moves between DEXs, and DEXs stealing money from other DEXs, and all we see is pulling go up and down from liquidity and from basically slippage point of view, and it's not healthy, it's not sustainable, it's not something that we can go to sleep knowing that we will wake up in the morning and everything will be the same. It's very scary, okay? And that can change the game. And the second thing that we have is dynamic fees, which mean it's meaning that first the pool that voting can also vote how much fees they want to charge. They can charge 0 fees if they want to. They can charge 10% if they like to. They can charge whatever they want. And it's not set by us as a protocol. It's by the pool, by the people. They are the bank. So they can charge whatever they want. And the way that the fee will be, it will be dynamic. If somebody buying the token that is booming and dropping the token that is crashing, it will pay more fees, right, than the guy that doing the other way around and is buying the underdog and selling the token that is booming. So the fees is changing based on demand. Bring the minimum fees to those that buy the underlying token and those that dumping the token that everybody else dumping. And it's providing more income stream into the system. And it's also providing from bot attack, which means if somebody wants to do front running attack as a bot, it probably will not attack this technology because there is no incentive. Most of the profit that you will do, it will be lose to the fees by suddenly buying as a front running attack, and front running somebody will push the MA, the movement price, in a way that most of his profit will go to the fees. The bot will not attack this technology, right? So, and another thing, by the way, that I want to pay attention here, but that exists on all our projects. I don't believe that the token that we see today in the market will survive. I think most of them will die, not from project point of view, from concept point of view. I think they will be die sooner or later because they're not based on anything. It's a thin air. They're basically representing nothing. They're representing idea that backed by anything. And I think the future of tokens, it will be backed by security or backed by bond or backed by income stream. So all our token in all our project, by the way, all of them, they basically designed like that from day one. We do not do any type of token that backed by speculation. We have token backed by income stream, which means instead of have a regular company with P&L, and then someday we're voting on distribution to share profit with investors, what we decided to do is basically create tokens that 80% of the income stream that's coming from the project distribute automatically to the token, which means every dollar that people trade, every dollar fee that's created by trading or swapping or anything, 20% of that go to Qwantum Finance in order to keep supporting the ecosystem, and 80%, not 8, not 20, not 50, 80% of the income, not profit, income, go back, buy the token, burn the token from the market, increase the value of the token, which means distribute like a royalty to the token holder. Now, I want you all think about it. If Uniswap and Unitoken was been built like that, the value of Uni will not be like today, because Uniswap gives to the LP more than $1 billion a year fees. Can you imagine yourself that instead of pay fees to LP, they will basically take that money, buy the token from the market, burn it, and compensate the LP with the tokens? The value of the token will have all the time buy pressure, regardless if it's a bear market or if it's a bull market. All day long, people buy, sell, buy, either dump, buy, sell. So all the time there's fees coming in, which means if somebody will want in the future to buy Uni token, all you need to do is see how much the income the ecosystem creates, the Uniswap, and then how much supply tokens in the market, and then what's the multiplying that people usually do, let's say 10, 20x. And here we go. You have valuation, how much Uniswap valuation as a token is supposed to be. And it's easy to know if you bought above the market or it's undervalued. Because if it's undervalued, everybody will buy it regardless to bear market. Because if the token creating for you 20% IRR or 50% IRR or 70% IRR, it's clear that compared to traditional instrument, it's undervalued. So there will be buy pressure even during a bear market. And that's how decentralized financial work is supposed to work. People don't do that right now. They're building a lot of Dogecoin and stuff like that in order to hope like a pyramid scheme that people will bite into it. It's working, but you will not survive. So we build ourselves in a way that all our tokens represent a royalty right from the top, and it's based on decentralized smart contracts, so it's easy to check that out. Right from the top, 80% go back to the tokens holders. So the next thing I want to talk about DEREX, which is really blowing mind and changing the entire ecosystem, is that feature that's called secure floor. And I want to explain what that means. Secure floor meaning that when you're building a pool and you're creating the pool for the first time, you're usually depositing two types of token, right? Let's say stablecoin, the native token, and the project token. So theoretically, if I will put $100 USDT with 100 token that belongs to the project, the smart contract understand that the ratio is 1-to-1, 100 against 100. So understand that one USDT equal to one project, one token of the project. In other words, the token worth $1, right? Now, the way that we design DEREX is that when price go up or go down, like you have today in Uniswap and PancakeSwap, we talked about the LP can vote whatever they like to vote, right? But assuming that they're not voting, assuming that they don't apply any type of regulation on the pool, what will happen the moment that the price will go back to the same price you start with, 1-to-1, the smart contract will, without voting needed, the smart contract automatically will trigger the secure floor, which means it will not let to people to keep dumping the price below 1-to-1. So in other words, if I, an investor, and I bought into the pool first when the pool being created, I can go to sleep knowing that it doesn't matter what the morning will look like, price cannot go below the face value that it starts with. If I'm an LP and I provide liquidity to the pool before the pool being created, I can know for sure that doesn't matter what the future will look like, I cannot lose my principal because the price cannot dump below that face value. And I want to be clear about this part because it's very changing the game. So we're creating initial bond offering, right? Again, it's not live right now. We keep testing stuff. So initial bond offering is basically a new technology that allow projects to raise money to the pool, not to the team, not for development, to the pool. And as you know, when new projects come to life, usually all the projects raising 50, 70, 80, sometimes even 100% of the money to the pool. Everybody's doing it, right? But what's the problem? The problem is that if you will go to Pink Sale and all those launchpad and invest your money in projects that say your money go to the pool, don't worry, we even lock the LP token. The problem is that you don't know if the team have some side token or airdrop token or hiding token that they will come to the pool like you and cash out all the money and whack pooling from the front, right? So there is no safe for your money, no matter if it go to the pool or not with the existing technology in the industry. And here, it's a different game. So I want to be clear. When project doing pre-sale, usually is offering 50% discount, usually. So what that means is somebody give you $100, you give them $200 value of token, right? 50% discount. And then when you get the $100, you basically need to add another $100 of token in order to put to the pool, right? So basically the project losing, even though it's offering 50%, is losing 75. That's the reality today. Here we say to project, come and open a bond, right? You can come over here and you can launch your bond. And you can offer basically 50% discount, which means when you put $100 of token, user will put $100 token and user will own those two. So you don't need to put 75 or lose 75, you lose 50, which is cheaper. But pay attention that when the user will push money, right, to the bond, what will happen, user will push, let's say, $100 value of token, and he will get another $100 of token. Both of them will go to the LP to create LP that represent those 200. And what will happen, the user will not going to receive the LP token because we talked about it. If user will receive the LP token, anytime you can dump it, get the token and dump the token and be a dumper. So what's happening here, the LP token being given to the bond and the user holding the bond, the investor holding the bond. So when the user want out, he said to the bond, I want out. So what's happening, the bond go and sell the LP token to the pool, receiving the money and the token, give to the user the money, and then return the leftover token to the project. So let me be clear what that means. Let's say I invested $100,000 in an LP protocol like that, in some basically offering in some pool. And let's say the project done 5x. So when I want out, I will get $500,000, right? Because there is 5x profit. But when I will go out and cash out my bond, what will happen, the leftover, which is equal, $500 as well, will be given back to the project, will be burned, depending on what the project decided, right? So in other words, I'm leaving on the table $500,000 value of token, which is hard for me to leave because there is a big incentive for me not to do that. So it's basically incentivizes LP holder to either sell the bond, right, on OTC and say to someone, buy my bond, it's worth 1 million, give me 800, 700, anything about 500, it's a win, right? Or it's incentivize me not to sell the bond at all and actually go to the LP pool and vote with other LP on regulation and not leave the pool. Now, every time I think the market go down, I need to cash out and run away. I can monitor with restrictions how I want to lose money or how I want to restrict the pool from losing money, and I not necessarily have to cash out. But definitely, if I will cash out, I will not get the money and the tokens because the token be given me for free, right? Discount, 50% discount. It be given for me, not for me to take the token because to be a dumper, right? And that's for the first time, very added value because when people doing pre-sale and give token with discount for investors, there is no way to prevent from them not to become to be a dumper. Everybody promised, I will not be a dumper, but everybody becomes to be a dumper eventually. So here you can walk away anytime you like, but you cannot become a dumper and there is an incentive for you not to walk away. Now, what is it that I said here that is the big wow? What I said here is that the way that it works, you can take, for example, $100,000 and instead of put it in one project, you can go and spread $1,000 on 100 projects. And theoretically, you can do that blindly. If you don't want to do it blindly, you can come and read white paper, whatever make you feel better about the project. But my point is that you don't need to. You don't care if the project will make it. You don't care if the project is a scammer. You don't care if the project is a stupid idea that nobody believes that have a chance. I mean, who believed that Shiba will have a chance after Dogecoin is already out there, right? Nobody. So the point is that you can go and spread $1,000 on 100 different projects. And even if you are the unlucky person on earth, right? Like amazing, you have zero luck, right? So all the projects, 100% of them fail. The worst case scenario will happen is that you call to the bond to receive the money. What will happen is that you get exactly the same face value with exactly the same token that you deposit. So the quantum finance models here is working like that. You acting as an investor only if the pool make money, if the token make money, if the project is successful. And you're acting as a holder if the project do nothing or fails. So you cannot lose your principal because it's impossible. The moment that people will try to dump or try to basically sell to the pool to take money out and give more shitcoin, what will happen, the secure floor will kick in and will stop the price to go below the face value that it starts with. So no matter how much money you put in before the pool being open, you cannot go below that face value no matter what. So that's the big wow here, because not only that is give to project for the first time fair chance. Nobody discriminate anybody. There is no community of bullshit due diligence. Nobody say your idea is not so solid, or the market is not worthy, or not believe in your idea. I mean, everybody have a fair chance. Also, it's removing all the bad actors. How the heck are you going to do scam if you cannot touch my money, right? You cannot dump tokens into the pool and touch my money anymore, right? So it's removing the scam, and it's also opened the door for non-sophisticated people. Think about it. Not everybody know how to do the diligence. So non-sophisticated people can go and spread the money all over, and whatever loss, they get the principal, whatever win, they have an upside. And more than that, because it's compliant with the Howey test, it's not a security. So the first time project will be able to solicit a regular non-accredited investor from US territory to basically participate in that vehicle as an investment without investing, right? So there is no basically a security component here. So that kind of a solution can change the game completely, how people fundraising to the pool. It doesn't mean that you don't need to still find solution like go to PDO and fundraising to the team, but this is not the place that you're fundraising for the team or for technology or building. This is when you're fundraising to the liquidity pool, right? Which is, as we talked, 80, 50, 70, sometimes even 100% of the fundraising that everybody is doing out there, right? Now, the second thing that I believe will happen in the future, I don't believe everybody will come here and push money one by one. I don't see the future like that. The way that I see the future is by far more sophisticated than that. I will show you an example how I see it. I think the future will be like that, with indexes. What that means is that people, instead of put money in liquidity management and yield aggregators, which right now have billions of dollars out there, I think what will happen, people will build indexes on top of DEREX, and we create a system that will allow anyone to build his own index. And we will create the first one. We'll create an index called Index 500, which means when you're pushing money, let's say you put $1,000, we'll split it automatically equally between the first 500 projects without even check who they are. As long as they have the secure floor, your money is protected. So we just go and put it on all of them, right? And other people can come and build their own index, and they can build criteria. They can say, I don't want to invest in everything. I want to invest only on those that they are Polygon chain, or only those that they are basically have a principal, no principal vesting, but profit vesting, or those that the token supply is less than or more than. So there is many criteria that everybody can create, and people can deploy the money to those indexes. And what's cool about those indexes is it's also a source of income, new source of income for players, because the index being created in in two ways. We have government rights and economic rights. The investor receiving to the wallet economic rights, which means they're always going to engage with the profit. But the government rights, they belong to whoever create the index. So he's the GP, which means he's the one that can go to the pool and vote on regulation and when to call to the bond and cash out, but the money goes directly to the investor. So the GP that create the pool, and he's the one that's going to do all the work on basically voting and creating regulation, is eligible to get something for his work because he's protecting the bank money, the customer's money, right? So everyone that create index can also decide how much carry meaning fee, you want to charge from profit, always from profit, never from principal, right? So if I create an index, I can say to people, if you invest my index, I will act on your behalf to vote on the pools and take care of your money. You cannot lose the principal anyway. I'm not taking free from your principal. And when I will call to the bond to sell, the money goes directly to your wallet anyway. There is no exposure. But I want 20%, 5%, 10% from the profit, right? So people can act as a GP and basically do the heavy lifting by working and take a carry. And what he's telling us, those that understand what I'm saying, is that it's opened the door for 401k and IRA, which is a pension money in the United States and around the world, because one of the guidelines of institution and those instruments is that people cannot leverage the IRA and 401k unless they're passive. They cannot invest in their own vehicle that they control. So here, the index basically allow somebody else to control, people acting as an LP and not as a GP, and they just deposit the money as a passive. Somebody won the show, they don't have the risk, so they can be non-accredited, they can be not sophisticated. And theoretically, if you invest in 1,000 different projects, maybe you will be lucky and one of the money will be end up with the right project that will boom like, like Shiba or whatever. But the point is that nobody knows. And because nobody knows, the best approach is to go after everything, right? And this model, Qwantum Finance model, that's removing the risk from the investors and basically only bring them upside, basically can change completely the game, how it's going to work. And another thing here to conclude this model, another thing I think will be is decentralized SPAC, which we're building, which allow any project instead of creating like that, right? A bond and waiting for people to come in the next 5 hours or 5 days or 5 months to invest. What will happen is that people can come here to the decentralized SPAC and they can call to the money by click of a button. So imagine yourself that there is 100 indexes out there. Imagine yourself that you build a project and the criteria of your project fit for 4 or 5 of them. Not all of them, but 4 or 5. So by click of a button, you can call the money from the 4 or 5 indexes. It will go to intermediate contract that will create LP, that will create the bond, that will distribute the GP LP back to everybody. So by click of a button, you can fundraise the entire fundraise that you need, and you're calling the money without waiting, without talking with anybody, right? Money be distributed instantly. So that's how I see the future, like massive of investment that go broadly and without any kind of barriers or human being that making decision. Everything will be trustless. You don't need to trust the project. You don't need to trust the team. You don't need to trust the idea. Worst case scenario, they did nothing and you lose nothing, right? So that's how we see the future. And when it's come to our project, we plan to utilize the IBO for ourselves. So every project that we have, we will open IBO in order to fundraise money to our pools as well, right? So that's how we will do fundraising for our pools from the public, because it's not a security. So in other words, we will not do a public sale anymore. So all those people that all the time in the group say, when you're doing public sale, where can I invest in anything like for example, smart token or PDO token or anything that is a public sale? We are not going to do public sale because it's a security issue. We're only going to do IBO. We're doing pre-sale based on 506B, Reg D 506B, but when it's come to public sale, we only do IBO because it's the only one that we can do which comply with regulation. But it's also removing the risk from the investors in a way that I believe it's the best, because those people cannot afford themselves to be sophisticated and lose money that they don't have. So it's better to provide such kind of tools. Kyle, do we have any question for the DEREX? Kyle, you there? Well, went to make a coffee. All right, I will continue. And besides that, you know that we have a reimbursement smart contract, which means every time you're basically interacting with any project that we have, you can come over here and basically claim the fees and the gas in exchange for token. So that's applying to all our projects, right? Another project that we are working on, and it will be coming into the market, and we will utilize that as well. It will be the LP insurance. LP insurance is basically a new technology that's designed to work with any protocol out there. Uniswap, PegaSwap, SushiSwap. Buy tokens from the project, and those money and token will be pushed to the pool, and the LP will never going to be in position of downside, which means if people going to dump, there is an insurance, 100% decentralized insurance that's protecting from dumping, right? And I don't want to go deeper how it works right now, but the way that it works is completely simple and it's completely decentralized. There is no kind of statistic or something like that. There is 100% money to back up in the case of dumping. So theoretically, imagine yourself that you go after any project on any DEX in EVM, and you're adding liquidity to the liquidity pool, but doesn't matter if the token will go under the price that you start with, whatever the price is, you are protected. You cannot lose 1 cent, right, from the native token that you put in. So your native token will be protected. So if the token is going up, you're winning. If people dumping on the pool, there is the insurance that protected you is completely decentralized. Once it will be ready, we'll do session on that. But it's something that we will utilize in order to do fundraising for other DEX that will work, because besides DEREX, that we will open a pool on DEREX by itself, we will also open for every project that we have pools on Uniswap, PegaSwap, SushiSwap, all those protocols out there. And we will utilize the LP insurance in order to invite people to add liquidity with protection from dumping, right? All right, so that's the LP insurance. Another thing that we work in during this 2023, and we want to see it really how the market will be affected by that. It's basically a new protocol that protecting stablecoin. I hope that it will be ready this year, but we've been busy with a lot of stuff, and some of the technology was very sophisticated, so it took more time. So what that means is that when people have stablecoin, doesn't matter which one, if it's USDC, if it's USDT, if it's BUSD, so it doesn't matter which protocol is out there, which stablecoin is out there. When people have stablecoin, there is a risk of dumping, right? Every protocol, every stablecoin is dumping, or DPAC. Some of them bouncing back, right? So for example, when DAI go down, most of the time go back. When USDT go down, most of the time go back. But sometimes they're not, right? We saw that with UST. So the point is that people going to park money on stablecoin. That's the future. People going to trade, and when they want to not trade, they need to park their money somewhere temporary to avoid fluctuation. But during that time, there is exposure, because you're trusting that the stablecoin, which is centralized entity, will not going under. And this is not a stablecoin. This is basically a system that designed to protect the stablecoin from any kind of fluctuation and inflation. And it's so brilliant because you can take any type of stablecoin in the world and you can protect that from DPAC. And if the project themselves DPAC, you can, even though you come, let's say, with USDT and USDT is 50% off, you can cash out different token. You can go and say, give me BUSDT, right? So it's basically a protection layer protection protocol for stablecoin. It's never been done before. It's something new, and we hope that it will be ready during the Q2 this coming year. And it will be fascinating to see how people going to engage with that. The next thing I want to do is talk about two projects that we are bringing into the market Q1, which is Metaverse and basically an NFT protocol. And here I want to explain them because it's blowing my mind how they've basically been created. So a lot of people know that during the last bull run, it was mostly because during 2017, Bancor, which is an Israeli company, created a DeFi protocol that allow liquidity without counterparty. And then Uniswap copied that model, simplified that in a way that it's more engageable. And basically during 2019, everything boomed because people for the first time can create the tokens, which they're brand new and not yet traded on big exchanges. And there was immediately liquidity available for them. And what he's telling you is that the moment that liquidity being created for tokens, there was more incentive for people to engage, buy and sell those tokens. Now, what's the problem with NFT? What's the problem with Metaverse? What's the problem with gaming or music or all those tokens that they are basically unique? The problem is that there is no liquidity, right? There is no way to know that you can sell it forward. And if I buy in a Metaverse, it's even worse, because if I will buy a piece of a land that belongs to some good protocol that look good today, I don't know if this protocol is going to survive tomorrow, because right now there is a race between Meta or Facebook, Microsoft, somebody building in his grandmother's basement something that nobody know about. So my point is that you don't know which Metaverse is going to survive or which one is going to be second life Metaverse that's going to disappear. And you may have a lot of land or a lot of NFTs that worthless, completely worthless. And that's problematic because no industry can work well if there is no liquidity in that industry. Nobody will buy Bitcoin back then if there was no way how to sell it to somebody else. And that's exactly what we created with Qwantum Finance. We've been able to create liquidity to Metaverse, liquidity to NFTs, but not just liquidity, we create liquidity that's removing the risk from the buyer. And I want to explain you how it works because it's really, in my opinion, can change the game completely. And I remind you that every project that we have, basically you can teleport your token between all the projects to either move position from project A to project B, or you can exit from project A to project B. So back to how it works. So the way that the entire concept works is that we basically allow the buyer to buy from the seller. Instead of AMM, like you have with cryptocurrency, we have RMM. So RMM standing for reverse market making. So instead of selling it forward to the smart contract or selling it forward to counterparty, you're selling it backward, right? Reverse to the seller. So what that means, how it works. So when the seller have NFTs or Metaverse land, what he's doing is offering, I will show you here, is offering basically a downside protection, right? Is offering a downside protection to the buyer, and it's still to the buyer how much downside protection is willing to give. Seller can give whatever you want. It can give 100%, 50%, 0%. It can go 10 years, 5 years, 1 year, 1 day, 0 days. The seller to decide how much protection and for how long it will be. And I will explain in a second why the seller will want to do that or what is in it for him from doing that. But first, let's talk about the buyer. So when the buyer buying basically a land, there is vacant land or developed land, and you can go after any metaverse that exists in the industry because it's like an aggregator of all the metaverse out there. It doesn't matter which one. And when he's buying basically a land, he can basically make an offer or accept an offer of how much downside protection he's willing to offer or how much he's willing to get. And the main idea, and by the way, here you can see even SmartPayment, which means people can pay with different token like BNB, even though it's an ETH, right? So that's how SmartPayment will be like a button of PayPal. It will be deployed on many projects like that, right? But if I have a ETH, I can go straightly and pay with it. So the point is that people can make an offer if they want to buy or sell this land. So let me give you an example of how it works. Let's say I'm the seller and I'm willing to offer to a buyer, which is you, 100% downside protection for 1 year. I say I can offer any type of how long and how much, it's up to me, but let's, for our simulation, assume that I'm willing to give 100% for 1 year. So what that mean? That means that when you deposit, let's say $1,000, your $1,000 will be on the smart contract. I will not engage with the money yet. And then you can take the land, you can flip it forward for more money, you can develop on the land, you can rent the land, make money from the rent. You can do whatever you want in the land. It's in your wallet. And if you change your mind, because you cannot flip it forward, or you change your mind from any type of reason during that period of time that I gave you, by click of a button, you don't need to even talk with me, but click of a button, you can return the token to the smart contract, and the smart contract will return the money for you, right, to you. And I will get my land back. But what's really happening here is that when your money been deposited, $1,000, it went to work. It went to Qwantum, and Venus, all those decentralized protocols that you trust. If you don't trust them, you should not engage with this system. It's assuming that you trust those protocols, right? So instead of you sending your money to there to sneeze or make APY, you can basically come to this protocol and send the money from here to Qwantum and Finance, all those places. And in the meantime, you have a land that you can generate income stream, or you can try to flip it for more. Now, if you cancel, I will get my land, you will get your money back directly from Qwantum with the Qwantum tokens, and you can keep staking it if you want with them or not. But I will keep the APY during that year, which means if I, for example, have 10,000 NFTs, and let's say if I will go to OpenSea, nobody knows who I am. I'm new artist. There is so many NFTs out there. Some of them even being created by AI. It's so crowded. A lot of people are scared, especially during a on OpenSea and do nothing. Imagine that I can give those NFTs to people with downside protection and say, hey, try to sell it forward, right? Try to flip it, try to see and holding it for some period of time, see if the value go up in the market. And then what will happen, if nothing happened, or if they change their mind and they return it, they get the money back. They don't have exposure for losses, but I keep the APY. So let's say I have 10,000 NFTs, I give them away for $1,000 each. It's $10 million. So I can generate other people money. So same thing with the land. I can basically sell my land, and simultaneously the buyer buying the land and not buying it. There is a quantum here. Is a buyer, because he bought the land is for sure is in wallet. He can develop on that, he can rent it, he can rent it out to Nike, he can do promotion on that, he can generate income stream, he can right? So it's kind of a between, it's kind of a pending between. And that's what's cool about it, because it's the first of its kind RMM, reverse market making, that allow people, instead of, if you cannot sell it forward, you can reverse it and basically sell it backward, right? And it's benefiting not as a zero-sum game like everything out there, is benefiting as a win-win game. The seller enjoy from APY, and the buyer enjoying from ability to flip and generate more money. The worst case scenario, not losing any, right? And that can open the door for mass adoption. That can allow people to go after new artists, anonymous singer, new games, land that they're empty. There is a lot of studios out there that want to buy land, develop on them, rent them out, make money, and let alone they try to sell it. But here they can do everything the same without buying it. They can temporarily holding it like in security money. And then when they want to return it, just get the security money back, right? but the seller getting APY from that money during that pending time. And obviously, there is during the time that people work with, besides the 100% downside protection, there is many more features to that. So, for example, there is a feature that if you have an NFT and you bought the NFT not under downside protection, let's say downside protection is over and you never return it, you keep the token. If the token have an IP, right? Let's say there is an IP to the token, and you say, okay, I want to buy this token. So you own the IP, right? It's yours. So what you can do, you can, by click of a button using our AI, you can basically create derivative, 110, 50, as many as you like. You can create derivative of that exact IP with a little bit small changes that will be created by the AI. And then as a user, not as an issuer, as a user, you can basically conducting initial offering. Can you imagine to yourself that you're buying, let's say, an ape that is popular? You pay, let's say, $100,000 for that ape, or $500,000 for that ape, and then you create a derivative of 100 different apes that look alike, like the original ape, and you sell them, let's say, for 10% of the real ape, but you have 100 of them, which means you're doing 10x over the sub collection. And when somebody will buy this sub collection from you, he can, by click of a button, can check if that sub collection token is original or not, if it's part of the tree, part of the factory, if it's really a daughter or a son of the real token, the real IP, right? So in their art, there is derivative. It's very well known that people do derivative. The token, they take basically some picture, and they're creating many versions of the picture with small changes, different color, but you can see that they are part of a family, that they are related, right? So that's what will force people basically to not holding it during the downside protection, but basically keep it, because you cannot do derivative as long that you, unless you own the IP, not temporary between. Same thing with land. You can buy land, and you can use our technology to do plot. You can take a land and split it to 100 plot, and you can rent each plot separately. And if you will make an income from each plot that the overall income is more than the land, it makes sense that you want to keep the land, because you're generating more money than the entire land cost, right? So those are kind of features that we have, including here we have basically multi-level ownership, which is another technology that designed to do better. Instead of you probably heard about royalty, like in OpenSea and other people. So royalty is not a good solution because it's putting conflict of interest, and second, it's not decentralized. So whoever buying something, if he need to pay royalty to all previous owner, and he got royalty with fiat money or directly to his wallet by whoever pay him his royalty, he doesn't have an incentive to disclose it, and there is no way to force him to pay it, right? So it's basically not decentralized. And also, if you take in the NFT or the land or whatever it is and sell it peer-to-peer or different platform, there is no way to know or force royalty whatsoever. So the concept of royalty that exists today in the market is not efficient. And we do not do that. We say, if you're buying a game or music or land and you rent it out, keep the royalty. It's all yours, right? If you make money from rent from the land, keep it 100%. But every time you're selling the land forward, there is owners before you. Every buyer can add themselves to be an owner. And for perpetuity, to enjoy from piece of the tree, instead of enjoy from the fruit, every owner can enjoy from piece of the tree forever. And people can basically add themselves as a multi-level ownership, and people can buy other people basically ownership by click of a button and say, oh, I see that you have 10% from this asset. I want to buy you out. They don't even need to talk with the person. One click, you just buy him out, and you own his basically shareholder, because the person put upfront how much you're willing to be buy out for, right? So everything is kind of automatically completely decentralized. And I mean, basically, when people creating an NFTs and coming to this marketplace, they can also basically buy and sell and using something called DVC. Now, I want to explain that point as a conclusion for that tech. The DVC is the way that I see how people will engage with this industry, blend, music, game, everything. So what is DVC? DVC is basically a smart contract that we built that everybody can deploy. You can come to the smart contract and you can say, okay, I want to create a smart contract with a buy criteria and sell criteria. Pay attention, there is no DAO, there is no voting, there is nothing. Once you create buy criteria, sell criteria, that's it. That's the buy criteria, sell criteria, nobody can change that. And you can say, I'm building a DVC, which is Decentralized Venture Capital, and my DVC going to buy everything, which 100% data protection, for example, or not everything, only token that belong to this protocol, or this blockchain, or this metaverse, or only token that never been sold before, or only token that not cost more than. So there is a lot of buy criteria and sell criteria that can be implemented on the DVC. And what's cool about it, when people adding money as a backer to the DVC and they become to be a backer, they know for sure that they are part of decentralized venture capital that utilizing that money to go and buy whatever the buy criteria and the sell criteria are. So everything takes place automatically. Nobody needs to sell it. Nobody needs to buy it. It's doing everything by himself. And there is two types of DVC. There is open-ended fund and closing-ended fund, which means there is fund that people can join and drop out anytime they like, no time limit. And there is closed funds that people can join until a certain day, and then money being deployed again and again until a certain day, and after that certain day, no more, and people can basically cash out. So the point is that when people deploy money, again, you don't need to do anything actively, it's passive, so it's feeding for 401k and IRAs and all those pension. So people can add the money as a backer to existing DVCs, and if they choose a DVC that have, for example, criteria of 100% data protection, they can know for sure that even if the DVC will buy million NFTs and land, and will try to sell them forward or even sell them on the same price just to keep himself as the ownership for perpetuity, they know for sure that even if everything will make zero profit, like all the NFT that have been bought and sold didn't generate any profit, they know for sure they cannot lose the principal because of the downside protection. They know for sure that if they deploy, let's say $100,000 to DVC, and you bought a lot of NFTs and try to flip them over, if nothing really brings fruit, they know for sure that they can get back with the exact $100,000. There is no risk to the $100,000 because of their downside protection. Now, whoever created DVC, which is anybody can create his own DVC, right? Click on the button, you can launch one. Once you create your own DVC, again, you can take a carry. You can say, listen, I'm developer and I using your money to buy lands, and I adding on those lands my design, building, museum, whatever, and then it's increasing the value of the land. You cannot do that without me. So I want 50% of the profit, again, only from the profit, right? Or I want 10% of the profit. Or if I'm an influencer and I have a lot of followers on Twitter, I can say every time I buy land, I tweet about it and creating more awareness. So there is a chance that a lot of people will want to come and invest in this, basically NFT. So you cannot do marketing without me. So I want 20% from the profit, right? So basically people can create their own DVCs with their own criteria, but they cannot touch it after the criteria being created. And they can take a carry. They can even limit how many backer can join in, how much they're allowed to invest, exactly like regular fund. So it's completely everything decentralized and changing the way how VCs in the world will work in the future, right? So this is the technology that we created for NFT and land. And again, I believe that NFT, metaverse are not going to walk away. They're going to stay here. They're going to be part of our life in very massive way. I just don't believe that they will be able to scale without liquidity. And that's what we create. We create liquidity to that industry using Qwantum Finance by RMM, reverse market making. And if you cannot sell it forward, you can sell it backward, and you don't have a risk. You're holding two positions simultaneously. You hold the NFT, but you don't hold the NFT at the same time. If you make profit and you're satisfied, you can decide that you hold it. If you don't make profit and you're not satisfied, you can decide that you never hold it. There is no tax trigger because you never complete the transaction. That's the new game of how we see the future. Obviously, you can come over here, utilize this technology, and go sell that NFT on OpenSea as well, with the downside protection and everything. You can go and put it over there. And one of the things that everybody already knows is that all our technology is a B2B. So we basically creating everything in a way that there is a white label. So once we have partners that we think they are good partners, we basically allow them to get a white label to our technology with their own look and feel, their own fees, and they can basically don't need to do any design or any type of work, but they can immediately operate anything under their own brand. And we believe in B2B rather than B2C. But that being said, one of the things that we're going to do, we're going to open around during Q1. So in a few days, we're going to open around for the NFT and the metaverse in order to welcome investors to invest in those vehicles. If you remember in the past when we raised money, we done tons of refunds, and whatever we've been left with, we utilize in order to invest in development. But we never really raise money for doing marketing or go to market because of the B2B model. But now we want to kind of raise money only for go-to-market and collaboration and make sure that if B2B is not really working immediately, because I think what made me that decision is that I thought everybody wants Uniswap after everybody saw that Uniswap is working and everybody wanted it, right? But in 2017 to 19, nobody wanted to fork Uniswap, right? There was a period of time that it was alone in the desert. So I think when people going to see our tech and say, wow, doesn't matter which one that I showed you, it's probably when the market start to boom and everybody will want to invest and they will want to get more and pay less. And at the time when it will boom, nobody will have a time to explore collaboration and licensing and development, because that's something that you do during a bear market, not something that you do during a bull market. So I want to make sure that we have massive money to take all our projects to the market and go with one big boom into the market, really massive market exposure to secure that our project will get enough chance to be seen and to be known. And obviously, the main goal is eventually the B2B, right? And the DEREX project that I showed you, it's another layer of another kind of double down. I want to make sure that by us giving that to the public, by us giving DEREX to the public, we're going to make sure that there will be a lot of influencer and a lot of community that holding DEREX and the IBO system. And by doing it, they will serve the entire ecosystem. So I'm trying to build more than one way how to make sure that what we're building will make it. There is no guarantee. We never said that there is a guarantee that any of our projects going to be successful. Nobody knows. I want to be clear. Nobody knows which project going to make it, if any, right? But we're doing everything in our power to make sure that we're reducing the risk and increasing the diversification and creating more engagement way how to increase the chances that all those projects will have a good chance. The good thing is that if one of them, only one, all we need is one. If one of those projects from our ecosystem will make it, it will basically drag along all other projects. Because if we have a good project that have daily trading, is a unicorn one, basically every project that is in the ecosystem, investors that bought this token know for sure that they have exit strategy. So we only need one project to make it in order to drag along all the other projects for success, right? So that's the goal. And what we hope to do during 2023, we're hoping to prepare ourselves to SPAC, to the NASDAQ. I don't know if NASDAQ will be good to go on 2023, right? It's not something that you can predict. Right now, a lot of people canceling IPOs. But if market will be ready for 2023. I hope that we will be ready for SPAC 2, because our main goal eventually is not only that all our project will have liquidity and access to crypto exchanges, but also we want the Qwantum Finance to be open to the NASDAQ. So basically, investor from the NASDAQ can invest in Qwantum, and Qwantum token can be converted to any other token. And the other way around, any other token can convert to Qwantum and convert back to the NASDAQ and go from the NASDAQ. So we try to create multiple ways how to engage with liquidity. And we have a lot on our plan for 2023. Right now, during a bear market, we do what we said we're going to do. We're going to focus on building. We share recently proof of development for some of the projects, not all of them, but you can see that some of the projects have more than 700 lines of codes, right? If I conclude all the project is more than 1.5 million lines of code, it's tons of lines of code. Just to be realistic, Uniswap is 300 lines of code. Ethereum that's been built over years is 600 lines of codes, right? So all our project is more than 1.5 million lines of code. It's massive lines of code, because to build something that is completely decentralized with new method like Qwantum Finance, it's not something that you finish by one day, right? And there is a lot of check, a lot of work. I'm not saying everything is perfect. I'm sure that there is error. I'm sure that there will be issues once we'll finish all the testing. But that's why we're here. We're here to try to do our best to bring the project to act exactly like we plan to act. And if we make it wrong, we will pivot to what is right. For example, when we created Jointer back then, many years ago, as a decentralized REIT for real estate, commercial real estate, we decided to convert Jointer to be basically decentralized ETF, right? Which means it will work with the metaverse, it will work with the NFT, it will work as a decentralized ETF first of its kind for any kind of DVC or decentralized venture capital that we're building. So that's what we do. We're pivoting. It's not a shame to pivot. Airbnb pivot 4 times, 5 times. A lot of other projects pivot a lot of time, and that's fine. As long as we're going with what we think the future will be. If we're right, we're taking the market, or there is a chance to take the market. If we're wrong, we'll pivot to what we think is the right thing to solve the problem. We don't go in after what is trendy. We're going what we think solving the issue, the problem, the pain most. And we hope that there will be mass adoption. We hope that our solution is the best out there. If you're in the crypto industry a long time like I do, you probably saw that 99% of the projects do not solving anything. They just copy each other. Whatever somebody building a project A, they copy to blockchain B, but they don't really bring a lot of innovation. There is not much innovation in the industry, a lot of copycats. But if you see also the pain, if you see that the DeFi is not working, you see that those tokens that are speculator and backed by nothing, if you see the government that don't like it, if you see investors, pension get lost, people losing their houses, losing I heard about many people in the last year that say that they had a friends and more than 10 that I can count that made a suicide in the last year because of losing all the money. So it's crazy how this industry is not yet there, but that's the right direction. So we're building something that hopefully will make it better. And you are our partner. You basically helping us as community to make it right, to give us feedback. You're on the ground floor, so you're going to see the bad, the good, and the ugly. That's the benefit of being earlier. And if it's work for everybody. So that's the good thing. We are all on the same boat, for better or worse, right? So we all hope that you will be for the better, and we all hope to do the best. And that's the summary for 2022, right? What is it that we're working, how much we're working. There was many other projects that they didn't cover because they are very earlier and there is not yet infrastructure to support them. They probably will be relevant in a few years from now because the market is not ready for them. But everything that I said to you during that session, it will be good for 2023. So some of them will be launched in Q1, some of them, I mean, when I say launch, I mean the project will be live, not the token trading. We are separating. Token trading is when the market will be good to go. There will be buy pressure to support appreciation. And when the project is good to go, we're not holding it. We open it as a beta. as a soft launch to allow people to engage, to see if we did something wrong, to get feedback and fix whatever. All right, can you hear me? Are you muted? Yeah. I think I have Robert. Here we go.
Now I can unmute.
Oh,
Hey,
yeah,
hi.
now I can hear you, Robert.
Thank you. Excellent presentation. Thank you very much, Yoda. Thank you, Kyle. So could you discuss your intellectual property protection strategy? Will you copyright 1% of the code? That's one way to copyright all the software without revealing it to the public. You file the copyright for like an API, 1% of the code is exposed to the public and 99% is secret, but it's all copyrighted because you filed it with the Copyright Patent Bureau trademarks.
So let's face it, we always filing patents on every technology that we have. That being said, all our patents do not good for crypto players because they don't care. It's good for institutional banks, all those players, Meta, like Facebook, all those players that want to engage, Visa, MasterCard, that want to engage, and that will be a blocker for them from copy. But crypto investors or crypto player, they're hiding behind cartoon, they copy each other code and they're brutal and they're mean, and they don't really care how much money you spend and how much time you invested. So because we understand that that's how it's going to be, we decided that instead of allow people to copy and clone, like Uniswap being cloned many, many times, we decided to help those people. I don't want them to clone, I want to clone for them. So we have click of a button that allow people to get the entire ecosystem, the entire technology with different look and feel. You don't need to have even knowledge, right? By click of a button, you can clone the entire design, you can clone the entire everything, call it whatever you want, and charge whatever fees you like. And when you make money, we make money.
I see. So okay, so that's
we actually
like
encouraging instead of
it's like a
it's
like a red hat open source model with revenue sharing.
Yeah, so we're encouraging the cloning under our umbrella and not against that.
Okay.
And by the way, when source code you mentioned, there will be code that we will reveal. For example, if somebody wants to see, hey, show me smart contract that's splitting the fee. So because whoever buy the token, what is it that you need is in mind? You need to know whether or not you believe the protocol will be useful, which means people will use it. And therefore, there is a good chance that they will fee. How much fee, nobody knows. But you want to verify that those fees ending up in the right direction, which means reaching how to increase the value of his own token. So those protocol, this code that's showing that the fee's been splitting 20% to Qwantum and 80% go back to the token holders, that's something that we can reveal, right? That's something that people can see, check. That's no problem. There is no secret here.
Could you have a Creative Commons license for some type of open source code?
No.
No.
When somebody wants to get, for example, a license from Wix, it doesn't get access to the code. It just duplicate the website and have website for free. But when he's leaving Wix, he doesn't take the code with him.
So that's the barrier to entry. It's kind of a stickiness. Yeah.
Yeah, I will build everything for you by click of a button. You don't need to spend any money or time on issues and errors, and there is a lot of cost to build technology. A project raising sometimes tens of millions, and they need years to build something new, right? Those that copy and clone, they don't need to raise anything. They don't need years. It's very simple, few weeks and you're good to go, maybe 6 months, 4 months. But those that building something from scratch, I don't know, like Banker, right? Banker raised $150 million and they spend years to build their first ecosystem, right?
So in terms of adoption and the incentives to adopt, could you discuss the ecosystem that you would like to develop and how you're going to interact? Is it only through Instagram, and Telegram, or what is your communication strategy? Do you want to be on the stage at Coin Agenda and D10 and other decentralized stages, and even the Ethereum community where the majority of developers are? Would you like to be speaking in Denver, at ETH Denver, or how are you going to communicate with your early adopters and your institutional adopters?
So I will share with you in a second. Let me find that first. The way that we're going to encourage community to increase it and then to communicate with that, it will be in two ways. First, every project that we're building, it will have a DAO LLC, right? A Wyoming DAO LLC. And therefore is limited by how many people can basically join during the SAFT. So when somebody building a vehicle, right? I don't want to communicate with the underlying investor directly. I want to talk with the GP or the community manager that basically engage with the user. So when we're raising money from communities, I usually talk with the communities, right? Directly, community manager, and they communicate that forward. Now, if one of the users want to get first-hand information, it can come to our channels. We have social media channels, either on social media like Twitter or Telegram or other places, and it can basically get first-hand information and ask questions and get answers, right? And also getting answer from other community members.
Right.
But mostly there is two directions: either the manager that syndicate money or directly the user that coming to the Telegram, right? That being said, when people reach out to me directly through email or social media, I never turn down unless I didn't see Telegram. Sometimes it's very noisy, but usually when people reach out to me, I always make a time to talk with anybody. So I always make time.
Thank you. And next question, in the one pager in your white page, in your white paper section, you have a one pager with listing some very prominent people like Christopher Cox and others. Obviously, these are people who are not coders, but they are prominent financiers or regulators, ex-regulators, retired people. That's a very powerful endorsement, just having their names. But what is the value of those names practically? Are they going to be tweeting to their followers? Are they going to be giving you a written endorsement? Will they show up at a webinar? Will they open doors for you with their ecosystem to try to get licenses for you? Or what? How do you view these names? What is your relationship with those names?
So I'll share it here. I will open that. People will see what you're talking about.
And by the way, congratulations. These are very prominent people, professors and former regulators and former financiers with major public companies. So it's already a terrific start. I haven't seen this kind of list for a long time for a startup.
Yeah, so all those people that you see here, and by the way, next week I have a call with another professor that is an expert for Qwantum Finance, even though I said there is no many expert in the world yet. It's very new field, right? So each one of them advises us in different way. So for example, David, which is the vice chairman of the NASDAQ, he joined us in the early stage a few years ago. Because even back then we planned to go to the NASDAQ, right? That's basically was how we do that. What's the best approach? And he's also the father of the Job Act. He's the one that actually created the Job Act that everybody's familiar with in the United States, right? When it's come to D Hook, which is rest in peace, he died recently, and he's been with us all the way. He's the founder of Visa. He's the guy that actually created credit card in the world, Visa. He invented the credit card, right? And he helping us because the way that he built the company Visa from the beginning was a decentralized way, and he believed that the technology did not exist then to support his vision. And once I connect with them and tell them what is my vision, he said that exactly was my vision back then many years ago. and invite me to Washington, Seattle, to sit with them all day long in order to help me out to understand his vision and see if there is a match and how I can implement his vision. And we find ourselves very good friends since then, because our brand thought in different direction how stuff's supposed to be decentralized and democratized. But unfortunately died recently. And when it comes to Nobel Prize winners, so for example, Elvin, which is living next by me, is a Stanford Nobel Prize winner from Stanford. He basically helped us out with the game theory. Even Eric is a game theory, basically Nobel Prize winner. And he also underwrite on the decentralized ETF. We have a unique technology. I don't want to get into it right now, but if it will work, and based on the work that Eric done for us, is he proved that it's working. Probably it will be the base, not just for decentralized ETF that removing risk from investors. It probably will be the ground to build insurance in the world, because right now all the insurance that exists is not really sufficient. And what we're building, if it really works, it will be the ground to create the future of insurance. And we use Eric in order to build formulas to try to prove us wrong, and he couldn't. He said it's working. And Elvin basically helped us with the game theory. So you can see that every player, including Chris Cox, which right now is not active anymore because he has a healthy, very deep advisor in the beginning of 2017-18. And best of his advice, we cancel our ICO. We've been ready, by the way, in 2017 to do ICOs of $100 million and then go to the NASDAQ and everything. Everything we've been played out back then. And we decided to a Wild Wild West, and Chris basically educated me how securities works and why everything that everybody is building is a big no-no. And he was absolutely right. Less than a year later, the SEC issued subpoena for everybody and everything crashed, right? So it's good for us that we didn't do that, because some people have been fined with more money than they raised. Some other find themselves in the jail. So I don't want to build anything or do anything that will destroy the company later on. So I'm very careful with decision that we made, even if it will take a little bit longer, even if it will upset some people, even if it's meaning, postpone launch or go to the NASDAQ 1 year or 5 years later. Whenever is the right moment, timing is everything. And we should not rush or shortcut stuff if we think it's just going to make a buck.
Okay, I have another question. If I were to invest $1 million from our SPV into one of your projects, which one would you recommend right now?
Oh, I don't want to answer that.
Okay, next question.
I don't want to answer that, because they're all my baby and I love them all. I cannot guarantee to say to you, hey, this one I'm going to make it more the other one. I can say to you that if you made the wrong decision, you can move.
And if I were to I can't purchase shares in the Atom Foundation or the Cosmos Foundation, which will be renamed Qwantum Foundation in Wyoming. Is that correct? That's off the table.
Yeah, we're doing fundraising for Project Always, and people that holding the token, they are not shareholder, they are token holders, like a product, like you bought a product. But we allow them to move between other product as a second position. But we distribute 80% of the royalty, the income stream, back to the share, not to the share.
And 20% goes to the foundation.
Yeah, the way that we design the ecosystem is that quantum building technology and license that to the project, and that's why Quantum get 20% ongoing for the royalty of supporting that basically licensing, right? So it's like two businesses that working together.
Okay, next question. If you were to dedicate $1 million in the future, I'm sure it'll be much more someday when you go public on NASDAQ or SPAC. But in the meantime, when you're still private, when it's still the token ecosystem, and you have, let's say, $1 million extra to invest in public relations, marketing, business development, corporate development, ambassador program, incentive program, conferences, webinars, the whole 9 yards. What's your vision of that asset allocation? Do you have vendors in mind, like Transform for crypto PR? Would you pay Cointelegraph to be profiled? How would you spend that $1 million?
So first, Transform, Michael is our investor, our advisor, and our PR. So he's already on board. But when it's come to go to the market, there is few stuff that help him to go to the market. One is awareness, and awareness usually being taking place by either channels like Cointelegraph or CoinDesk and all those news media that communicating. So partner with them and having a heavy budget will cause a massive covering because eventually they're also a business and they're pursuing a way of how to make money too. But they're not going to lie and say you're the best just because you pay them, right? Cointelegraph exploring right now to partner with us. So obviously, if we have a budget and partnership, and I already had conversation with the CEO, so it will put our in position that we are more like spending money, but also partnering with this media. That being said, awareness is not just media. Awareness is also social media. So there is a lot of groups out there with influencers. Some groups small, 1,000. Some groups large, 100,000. But all the groups have ability to basically change the mind or to push or shield idea. And we need to find a way how to bring all those influencers on board to be part of our ecosystem. So for example, one of the very well-known called DAO, which is a bunch of influencers, right, that making voting on project, and they don't accept every project. They don't accept investing in every project. They're really going hard on which project is good, bad, or ugly. They invest in us and they investigate it, and they're very fascinating with this technology. And we have other players and other investors and influencers. The goal is to bring many. We don't have many. We need many. We need as many as possible out there to be part of our ecosystem, because if there is something for them or in it for them, they will push, they will expose, they will not lie, they will not sell whatever is not exist, but they will deliver the knowledge or expose the people to what it is. And that's what we're looking for. We're looking for awareness. So I will say that go to the market is massive awareness, right? And not only that, there is incentive for people coming in. So people looking for incentive. During a bear market, they don't appreciate token money. During bull market, everybody wants only tokens. So the point is that we need to be in combination. So we want them to have an upside, but we also want to have them something right away. And same thing with media. They're also looking for both, right?
Right.
And partnership. If there is a partnership, so for example, you mentioned to me Start Agent, Kickstarter, Indiegogo. Those players have marketplace for A+ regulation, right? Or non-equity tokens like NFTs. So if we can introduce to them for some of our solution as a licensing, which they are not a security, they have the traffic. They have a massive traffic. So if they have NFT or Multiverse license or DEREX IBO license on the platform, it's immediately exposure for tens of millions of potential users that will engage with that. So all I say is that once we put the puzzle together, once we will create exposure to one thing, it will be flow and drag along all other projects.
Okay, next question. Thank you. Excellent answers. Could you scroll down to the venture partners for a moment? Okay, so are these investors who have already invested in any of your tokens, or are these on
Yes,
the?
yes. We only put here logos of, and there is many logos other than are not here, but we need to add. There is many logos that missing. We only add here basically those that either collaborate with us or invest in us, or maybe some of them got a refund and we never removed them. You know, but we never put a logo if there is no any partnership or
Sure.
investment or collaboration or something.
How did they get a refund? They decided to opt out of the license program. They didn't license, but they opted out of investing after.
Yeah, so back then when we raised money, it was a bull run, and then everybody kind of coming in without me even allow them to send money, and I had to send them money back and say, you don't have SAFT, I cannot accept your money.
Oh, I see.
And then once they send the money in, we realized that we accept too many people without added value. Like all the tickets gone too quickly just for money, but no added value, no smart money. And we had other investors that say, hey, I can bring added value, and we didn't have a ticket for them. And we decided that we will conduct a supply change. We will change the supply, increase it significantly. And we say to people, whoever is not feel comfortable, because increasing supply is like delusion, right? So we say, if you're not comfortable with that, if you're not, send them back the money. They use the T or BNB or Ethereum that they send, and just send it back and cancel the theft.
Amazing. Okay. Who's your largest?
If I bring a promise and somebody, it's like I say, okay, I cannot do 80%. Tomorrow I will say I need to pay 70. I cannot change it. It's an agreement. I need your consent,
Sure.
you know? And then you say, I do not agree. So I will say, okay, can I buy you out? I mean, I cannot force my willing on you if there is an agreement, even if it's virtual agreement, you know, verbal agreement.
Yep. Yep. Do you have a relationship with the crypto community in Zug in Switzerland? It's okay if you don't.
I know people that I talked with that are
Okay.
there. I never visit there.
Yeah.
If that's your question. So I never categorize. I don't have a list of people that I know, oh, you from the Bay Area, Silicon Valley, you know, you are not, you're from Switzerland.
Okay.
I never categorize people where they are.
Yeah, of course. So could you, in terms of a SWOT analysis, strengths, weaknesses, opportunities, and threats, you've discussed the strengths, you've discussed the opportunities, and you've neutralized, I think, some of the threats. You've discussed some of the weaknesses that you have to overcome. Is capital one of those weaknesses, because we are in a bear market and this is a time for building, but also you want to raise money before the bull market, meaning, so you want to be ready at the starting gate with, a couple $1 million in the bank, so you can basically buy mind share and get access to the top influencers and access to the top VCs, and, go on a roadshow, and that's expensive. So you could stay home and do that, but it wouldn't be as effective as going face to face and engaging people. But Silicon Valley is a great place to be. There's plenty of money here. So what is your attitude toward timing, given that there is uncertainty about the timing of the next bull market? We know that bull markets follow bear markets. Even bad bear markets are followed by good bull markets. So I have no doubt we're going to have another bull market in crypto, but it'll be a very different market. There'll be more institutional players, more regulations. There'll be obviously more once burned, twice shy. There'll be some skeptical people who will be more diversified and more disciplined, and maybe less crazy behavior, we hope. And you'll be among the most mature company or ecosystems to solve problems. I'm sure there are other problem solvers, pain points to be solved. But I know you're confident and optimistic, but what is your fundraising strategy in a way that would give you enough dry powder so that when you're ready to deploy your full engagement strategy,
So-
you're you're overfunded, you're oversubscribed now, but how do you build up a war chest is my question.
So
I have my own answer to the question,
Yeah,
but I'd
so-
like to hear yours.
We raised money for development, and then we return a lot, and we had to be very lean per project because we're working on many. And by the way, average line of code that developer is doing is like 20,000 line of code a year, right? And we have 1.5 million lines of code being created, so you can imagine how many team member involved in order to build it. And we never took money or raised money in order to do marketing. That wasn't on the plate from the beginning because of the B2B concept. But then, I learned that people will not take something and burst it as a licensing unless it's prove himself, or at least show that it's working or there is interest. So I need to do the kick. So in other words, I need to be sure that the project hit the market and get exposure and people understand it and like it and like the way that we design it. So I need to say, okay, B2B is our strategy, but now we have different strategy, which is regular go-to-market. And then I need to say, okay, I need another strategy, which is basically take one of our best projects and give it away to the public, to the people, so they will become to be the owner of that project. And that's how they will become to be part of our Qwantum Finance community, right? So I'm trying to build, and maybe tomorrow will come with more idea. I need to build many ways how to do that. Now, how much money needed in order to take you to the market? It's depending of how many projects you take into the market, or it's depending how long it's take you to go to the market. I'm not sure that we need to take to the market and do massive marketing on each project. I think we should choose the cherry picking the stuff that can basically crack the open. It's like EAP, the yacht club. Once they did something that become to be good, now they're leveraging that to everything, right? Once you have a project that's doing something good, now we can do piggybacking with other projects or other things. So we just need to be massive on something that is the best. You mentioned by yourself that institution going to play, and I believe that it's true. I believe that new money will come in, but it will require new game. Pump and dump, speculating, pyramid scheme cannot align with this new money. Need to be some change, and I believe that we are bringing that change. So hopefully we'll be able to dedicate some of the money to, like I said, to go to the market, to the crypto industry, but also we'll be able to go to new player like institutional, like pension fund, IRA, 401k. There is family offices. There were a lot of players that never play ball truly directly with this industry. Sometimes they put some money in some syndication, some SPV, and they say, go play Bitcoin, right? But they never really come in because there was low risk and makes sense regulation structure for them. And that's what we want to play. We want to kind of find a way how to do that. I cannot tell you today that I have the best strategy or the best idea. I just know that there is many ways how to do that. Eventually, it's to make people to know that we exist. That's the most important.
So the Transform Agency has their finger on the pulse of the market. They also have an ecosystem under Michael Turpin's leadership, Bit Angels, as you know, and I think that name is on your ecosystem chart. And it seems that people organize roadshows for startups to go on the conference circuit. And at the peak of the conference circuit last year, the fees for sponsorship were very high, and I imagine they all came down a lot, because the market demand came down. And of course, it's cyclical, so we're going to see the bottom of the cycle probably next year as interest rates peak. And then as interest rates come down, maybe it'll take a year or two for them to come back down. They may stay high for a few years because of stagflation will be persistent. So in the scenario that we have persistent inflation, the Fed will keep fighting for a decade, as long as it takes to stabilize prices. And in that environment, people can still make money and get liquidity on equity, on OTCQB, on NASDAQ, and Toronto and London alternative investment market and other venture exchanges. Hong Kong has a great venture exchange, for example. So there's always speculators in equity who are willing to invest early stage, pre-revenue, particularly OTCQB. You have a halo for a year or two before you run out of time and money and credibility. So would you consider issuing equity in a holding company in the future to participate in the royalty stream of the foundation? Would you consider an equity strategy, or do you feel that that's antithetical or different from your decentralized platform strategy?
So basically what we plan to our ecosystem, we have digital equity in the Qwantum Finance. So the token themselves representing equity, right? It's basically a non-voting preferred stocks. And once we'll do a SPAC, before we will go and do the SPAC, 90 days before that, we'll conduct pre-SPAC, and we'll allow basically another round for people to invest in the Qwantum Finance. But that will be before the pre-SPAC, not when, I don't know when the SPAC may take place. So once we'll be ready and the market will be ready, and we'll plan to do SPAC 90 days before the SPAC, because the SEC require 90 days to close the round before, we'll do a pre-SPAC, and we will do a round to the Qwantum level because our valuation in 2018 was 100 million. So most likely we'll do a round that is more than a unicorn level, but that will be pre-SPAC, not now. And hopefully when we will do that, the ecosystem, the project, there will be income stream, there is traffic, there is trading tokens, which liquidity exists, so it will be easy to perform that pre-SPAC. And the pre-SPAC that we'll do is mostly in order to go strongly to the NASDAQ, and not in order to raise money, because you just want to show basically strong. But right now it's too earlier to do any type of pre-SPAC.
Understood, but you could do convertible notes.
We already done convertible notes. We already finished with that. We done that before in 2017 and 18.
Got it.
But again, whoever invests in any project, not only that it can move between the project, it can actually send face value to utilize the token to convert to the Qwantum token, to the equity one. So if someone have, for example, NFT tokens that invest in the NFT or the metaverse, and you have $1 million that become to be $10 million, it can teleport that $10 million back up to the Qwantum Finance.
Understood.
So everything can move between everybody. It's floating.
Okay. And in terms of the cap table for the convertible notes, the cap table for the investors in each token project, the cap table for, let's say, the ownership equity that is on the board of the foundation. So that even though the foundation doesn't, in Wyoming, the Dow Foundation doesn't issue equity, it has managing members, and you're a managing member. Do you have other managing members?
Yeah, but I don't want to talk about, I prefer when we're talking about projects to keep answering questions that they are more like buying a token like a product, and not answering questions that sounds like we are selling
sure.
Right. So
no,
I
understand.
really want to be
You're not offering security.
I want to be clear. We are not offering any shareholders on any company, any project, anything. We're offering a product, which is token that represent income stream from the project, decentralized project. Whoever buys from the project basically have the right to hold the token that represent the income stream from the project. There is no sharing, there is no voting, there is no nothing.
But there is governance.
When you're holding the token that belongs to the project, the smart contract have rights that you can vote with other token holders. So it's a DAO token that you can vote. So for example, if you're going to dumper shield, you can vote with other people if you want to get out of the dumper shield. You can waive. You can vote that you don't want dumper shield, but then everybody will go to the market at once and you will race to the bottom and hurt each other. But it's up to you. It's like I said, dumper shield is vesting without vesting. You can vote to stay, you can vote to leave. It's up to you. There is no will investing. Or smart swap. Smart swap charging fee, but if all the token holders say it's too high, let's reduce, you can vote to reduce. If you think that it's too little, you can increase.
Do you expect to be regulated by the CFTC? And do you expect the SEC to review what you're doing? And is there a way to have an engagement strategy through an SEC lawyer eventually that will give you a way of having a discussion?
The
so that
SEC, it's expensive, but it's doable. SEC have something called, let's say you create NFT and Metaverse, and we claim that it's not a security, okay? It can take 6 to 12 months, sometimes even 2 years, but we can apply to the SEC to get a letter from the SEC.
A no action letter?
A non-action letter that say, we review, it's not a security, don't be afraid, we will not come after you, right? So for example, with DEREX, we may consider to do that, by the way, because I claiming that DEREX is not an investment. That's on our old opinions, but it will be good practice eventually to issue some kind of a non-action letter from the SEC, because then many institutions and IRA and 401k will utilize it, especially non-accredited investors. And players like Start Agent and all those will welcome that as a licensing if it's not a security. It will be good win for DEREX to show that IBO is not security, but it's not something that SEC issuing overnight. It's very expensive. It can cost $500,000 to $1 million. It's a year or two of back and forth until they're finishing to issue that. But once you have it, it's a very good win. And very good, by the way, PR.
Oh, sure. Brad Garlinghouse, who I met with in Davos, he
Angelis made his name by doing it back then.
Right. So Ripple obviously had a problem with the SEC, and they, settled, and they had to pay a fine, I think. And the price went down when the SEC started litigation, and then it recovered when they settled. And it looks like they're in good shape now with the SEC. So by engaging early, they would have avoided misunderstanding. And it was mostly the SEC's fault because they had regulatory ambiguity. They didn't clarify.
So I can tell you that I know the SEC. We're working with players that working with the SEC. Without that letter, everything that you said, like I'm reaching out to them, I talk with them, they will say to you, I'm not your attorney, but you should be careful doing A, B, C, and D without talking about your project. So they don't really advising you because they're not advisor. And if you really want to be out of the hook of anything that you're doing, what we do, we basically conducting pre-sale under SAFT, under Reg D 506B. We don't play with that. We're following and we're working with the SEC, and we're disclosing to the SEC everything, and we registered it on the SEC ledger before we're doing anything. And once it's coming to following ground, we make sure that we doing, for example, in the past, we did KYC and block all the US residents. So we didn't allow US residents to participate or other certain countries. And we may or may not do it on DEREX, or we need to see how we're going to do it, because like I said, DEREX is not an investment. It complies with the Howey test. But since we're not going to touch the money, there is no risk for there. So even if the SEC will come to me and say, hey, return the money, I never touched the money. It's basically in the bond, in the pool, people stake it, they can take it out by click of a button, it belongs to them. I never raise money for myself or the project, it belongs to the liquidity pool, and they own it. So that's why I feel comfortable with this method, but I do not feel comfortable to do any public sale like everybody is doing in the world. It's big no.
Let's see. Excellent. Okay. And had you considered an offshore jurisdiction like Bermuda?
Oh, yeah. We've been through that. We checked it out. It doesn't work. As long as
Okay.
that 51% of the ownership of the vehicle, the US, it belongs to US no matter where you are. It's after Trump
Qwantum with the W is your final, at least interim decision that you're going to go with Qwantum and trademark that as well as create. Yeah, I see you have a logo, but is this Qwantum? Do you want it? What's the theory behind the word quantum? You want it to be different from Qwantum Finance spelled with a Q.
Yeah, I
right?
don't want to call it. It's like I will give an example. It's like you call it. You see here, music finance. You
Yeah.
see here. So we call it music finance, but it's spelled a little bit different than traditional music, right? So I want to be associated with Qwantum Finance because I believe that in a year or two, everybody will talk about only Qwantum Finance models. And everybody will ask, does your project support it? Do you have a code based on quantum? You will see everybody will talk quantum. It doesn't make sense anymore to do binary method. And I prefer to, it's like Jeff Bezos said once, you don't build something by chasing after wave. You're building something and you wait to wave to come and take you with him. If there is no wave, keep building something and pivot until the wave will come, but you're not chasing after wave. So I think the future will be quantum finance. It's definitely we build it without even know that we're building quantum finance. But now that we know that it's an industry that's coming and starting to take a shape and people take it seriously, and there is a lot of work going on and professors and seminars and people talking about it heavily, that this is the new industry of economy. We want to be the leader of that models when it comes to blockchain. And we want to be associated, but we don't want to call it quantum because when you're searching on Google, quantum will not be first because the name quantum will be not under our name. Usually
So-
first you have Wikipedia and all those that talking really quantum.
So Google, and other major firms like Salesforce, they all have certification skills programs. So even at the Government Blockchain Association, which I'm in the leadership team, we're planning a certification program so people can put the badge on their LinkedIn, like Google Cloud certification. Could you have possibly a year or two from now a quantum finance certification program so people can be authorized B2B ambassadors, authorized B2B sales people who are trained and certified with the knowledge necessary to explain it to experts in the field of licensing?
We're not here to spread the word about quantum finance or be a professor. We only focus in on building projects that are based on quantum finance, that reducing risk and increasing liquidity. If there is any type of any project out there or any NEM or Dogecoin or whatever is the next nice temporary pyramid scheme, I don't want to touch that if it's not aligned with our core business. We are not academy. We are focusing on solving problem. And if they're really solving the pain and it's the best method in the world, I want to introduce them to the world to utilize them. And if we do not solve problem, I want to find different way how to solve problems. So we're going after solving problem and not after teaching method, And by the way, Robert, we can do a lot of private one-on-one question because
Of
Kyle
course.
there is other
We're
questions.
running out of time. Thank you very much for answering my questions. I appreciate it.
Kyle,
Thank
what
you.
other questions we have? Kyle? Okay. I see that.
Yeah, Zoom moved you to host for some reason, so you've been host for the second half of the call.
All right. I didn't know this. I thought, why you muted?
Yeah, I've been sitting here. You're acting like I'm just drinking coffee for the last 2 hours, but
So when I say you drink coffee, you try to click on mute and it didn't work. Okay. Okay.
But I can't see any of the questions, so because I got removed from host,
Oh.
you would have to look under the messages to see if there's any questions.
Let me host again and tell me if you can see.
All right, yeah, it looks like I'm put back here as host. I don't see any
Oh, you cannot
uncollected
see history, and now I
questions.
cannot see history either. Okay.
Well, I see. Okay, so like, does Dumper Shield collect fees? So I answer that. Dumper Shield does not charge a fee.
To the Dumper Shield, let's say somebody doing airdrop, pre-sale, public sale, and you don't want user to claim the token to the wallet and be a dumper, you can send them to claim into the Dumper Shield, and they can decide how long the Dumper Shield will be. Now, people can basically add the token to the Dumper Shield. It's completely free. But when they want to sell for each other OTC, there is a fee there, right? Which 100% reimburses with the PDO token. But right now it's zero. There is no really active fee. But the smart contract building have a fee. Even the gateway, when you're selling, utilizing the gateway, there is fee. But right now it's zero, right? If the community of the PDO will want to apply on the Dumper Shield fees later on, they can vote to apply fees, and how much, it's up to them.
Okay, perfect. So it's starting at 0, but it's now votable to be increased. Correct?
Yeah. And
Okay.
it belongs to PDO, so every income from the Dumper Shield go to PDO token holders. But straightforward,
and hey-
just utilizing as a vesting, it's free. Everybody can add themselves and do vesting. It's totally free. And right now there is not even fees for the OTC and the gateway.
Okay, and Robert, I received your message. I forwarded it on to Yoda. It's good to schedule via Calendly with him. So we'll get Yoda's Calendly sent over to you. So, wishing everyone here a happy new year upcoming. Thanks for sticking around for a 3-hour call. I told Banksy it'd be 2 hours, but it looks like we are getting close to 3 hours here.
Buffer, all the time buffer.
So pretty good. I mean, we kept Yoda, I guess, under 5 hours. But
Yeah,
thanks for
a lot.
sharing everything with us, Yoda.
Yeah, absolutely. So happy new year for everybody. 2022 is ended. Let's see how 2023 will play. And we should hope for the best for the ecosystem and to the industry to recover from the last event that we all been shocked from.
All right. Well, thank you, everyone. Have a great day. And we'll put this recording on